Good morning, everyone. This is Rose. Today is Tuesday, June 25th, 2 minutes after 9 a.m. Eastern Time. Okay, sorry about that. Just needed to reply to a team member. And at the meantime, just wanted to wait for others to join. All right, so it's a little bit more have joined, so let's just give it a minute. All right, so today I'm going to be on till midday, noon, and then Brad Wolf will join and take over for the afternoon, so don't go anywhere. And it's tomorrow, the 26th, Tim Fairweather in the morning, and I come in the afternoon. Tim Stout comes in on the 27th, Thursday, and I come in the afternoon. And then Brad and I will close the week on Friday. Okay. So the last week is the last 4 days of this month before July kicks in. All right, market is around the 5,500s. We had a very interesting day yesterday, and on Friday we were sideways, and the half of Thursday we were sideways, so that continued. And it created, with yesterday's high, some kind of a bear flag, and the market decided to sell a little bit, but only because on the daily chart, we had a doji on Friday, and it's not a really good buy signal bar. It's also the outside down day before, which is Thursday, pretty strong, so we got a bad follow through, but it's a follow through on Friday. But it is a bull bar, so there are probably buyers below that. So yesterday we had opened here, tested above, and probably some buyers were stuck up there, disappointed, because that right there, even though it's a momentum, but it's a weak continuation for bulls. So if anybody's stuck there, they're going to scale in, maybe at the support right here, which is a breakout test, right? It's a good place to buy. And then go back up to maybe there or get as close as possible, exit out before this day closes bearish. So it did close bearish, but we already knew yesterday when I was charting this daily chart, daily candles, I said that we're going to come back down and we're going to probably test this outside bar. That's an inside. I'm sorry, that's an outside and that's an inside. So here's an outside bar's breakout point, and we could actually test that breakout point and stop right there. But if bears want to continue, we could also come down and test the midpoint of that. But I was more interested in the breakout point and we have arrived. So I had two trend lines right there, and I said in between these two trend lines, I had two options, either the most extreme option or the consolidated. So I'm basically tagging as many lows as possible. And I said probably we're going to test in between these two lines and that breakout point of this outside bar. Let me put a little diamond so I know you know what I'm talking about. So this is the bar, and that's the breakout point. So that's a pullback, and that's what we tested yesterday. Now, can market continue to sell today? Well, let's take a look. We had a double top bear flag on these hourly charts, but it was also head and shoulders pattern. Left shoulder never was violated, so bulls try to get close as possible, but that's the best they could do, and then the market sells. We do have a wedge bottom here, and so we had really good open. It was a buy the close, and we gapped up, so we had a measured move to the upside. So there were several ways to measure that. I measured this first, but you can definitely take that. Why is that? Okay, well, look at the body. So I'm always looking for body breakout, not necessarily wick breakout. So that is perfectly fine. Or you could say, well, I think I'm just going to measure from here, and that's going to, and my stop's there, and that's going to be my is measured new. And bulls actually gave that. But if you wanted to stay conservative, you could have simply just taken that high. You would have taken profit and be down with 57.75. So really good for the bulls, but many kept buying, and they were looking for maybe a quick pullback and continuation. That's a parabolic move up. So now they're disappointed with bar 9 and follow through 8, but you got lower wicks because everybody who's stuck above bar 8 started to scale in. But you got 2 bear bars closing on their midpoints or on their lows. That's probably going to look for a second leg or a third leg. So we expected the second leg with bar 12. And the market came back down and tested the moving average. So a good place to buy. You have 2-legged pullback. Some are buying. They're hoping to get back to the bar 8 highs, but we're not able to do so. Here's the first try. Here's the second try. When the second try cannot take out the prior bear bars open or highs, you're going to get the third leg. That's how I look at the third leg count. If this bar were to get up here, probably that pullback would have been very shallow, and we would have gone up and tested that high. But since we could not get to the bar 12 high, market continues with the third leg down. So you do have a bear flag there, comes down, extends, you get a wedge bottom. That's a bull flag. So market starts to buy, but you got a big up, you got fairly good, not so big down because that bullish gap maintained by bulls, so stayed open. So to me, this is still, remember I said several occasions that this is going to create a sideways price action. But because we have not closed this gap, bulls are going to try to get back to the bar 8 highs. Okay, so which is the prior high. And I kept saying, I want to see the prior high tested, so I'm looking for any bear gaps to be closed. This bar failed, so we came down, but strong 2 bars. So I'm expecting a second leg up. We closed this gap, but it's an inner gap, right? I still need bulls to actually go with the third leg up, and they're not doing all that great. So I drew that line. I don't know if you guys paid any attention there, but so I had this right there, 52.25. And I kept looking for bulls to get above it, and they never were able to. So here's the first try, second try. And every time they try, they're making lower highs. And we're going sideways more than 10 bars, actually 20 bars. So this is a tight trading range. And I'm seeing 3 legs for each side. Bear leg 1, 2, and 3. Bull leg 1, 1, 2, and 3. Here's even the 4th one, right? And bulls are not able to get to the 52.25. Not able to get above the 52.25, we're not going to go back up there. So now I'm looking for failure over failure. This is a bull flag, but a bull flag is failing. Most likely we're going to sell. So I'm looking for 2 consecutive bear bars, one of them closing really strongly on its low. There it is, 38 and 39. You can simply enter and stop above 38. And that's your 1R, that's your 2R, and then at this point there's a gap bar here. Any pullback, not able to close that, or even go back and test the 43 low, we're going to continue to come down. So that creates a spike, pullback, and channel down. And here's your 1, 2, 3R. Market could go to 4R. These light blue lines are your rewards. So we come to the 3R. We did close 1 bear bar. We're making new lows, and I got excited here. There was a second entry long. I was actually trading this on Discord in the afternoon with a bunch of people. So I said we made a new low. I'm looking for a major trend reversal, but the problem here is that this is a bear flag. You get a spike, you got a pullback, and you got a channel. So when you start to see, markets start to go sideways and up, right? You're going to see bears here. Try 1, bulls will try twice, and you're going to see bears here, and that could actually swing back down. But I'm looking for a second entry long, and I want to buy, and I want to take profit there. So here's the first entry long with lower low. Here's the second entry long, but I'm not very excited about it because of bar 61. But they bought it anyway. Now, okay, this was a good bar, so I was long, and I took a little bit of profit there, but I was not happy with bar 63. When I see something like this and a bar 63 is not a bull close, yet it's a doji, I know this is not going to go any further. So I have this area marked, but also this is an ATR bar, okay? So if you actually measure this, what is an ATR? It's a breakout bar, and it's a gap bar. So when I actually measure this, I'm looking at the pullbacks. I am looking at the pullbacks. I only measure the body, not the wicks. Now check this out. Look how accurate this is. Okay, look at this. This is a breakout, so it's going to hit this target, that target, maybe even this target. Okay, furthermore is also possible, but only if after touching these targets, right, it's going to pull back. If this area, the last breakout point of this ATR bar holding, and you can see it's holding, right? Even if bars actually start to close inside, look, this area is resistance. We're not closing above it, so we're not going to go up here, okay? So right there, you can sell underneath 69. I was watching this very closely just to see. But I took profit here, and I got tired, and I didn't trade any of this. I got distracted with family members. I said, now is the time to walk away. I really didn't sell this. But if I were to sell this, is bar 69 or 70 would have been my cue to sell, and you're getting a follow through, right? That's also spike pullback channel down, and it's breaking down. So you know we're going to probably take out those prior lows, and you're going to get a measured move. So there's several different measured moves you can measure from here, right? And that is the closest we've gotten. Or you can simply use that, right? So I'm using this body breakout, and that's your measured move. And that's perfect because at the end of the day, that's bar 79. It's already 10 minutes after the bell, closing bell. But market is giving you enough room to scalp before it reverses back up. So here's the thing. Bears, there was a measured move here, right? You got market going sideways, and now we're breaking these lows. So your measured move is from here, is early on, you should have measured this, right? And then this would have been your target. Now, did we get to that target? Yes, we did. Either or, look, either you measure early on or you measure from this structure. This is a wedge failure, right? It actually goes to the third leg starting point, and it fails back down because it's a spike pullback channel, is a bear flag. It's going to test the channel starting point and probably look for sellers. You look for bulls twice, and if they fail, you look for some kind of a head and shoulders pattern. You look for some kind of a bear flag, double top, and you sell. So 33% pullback into this bar. That's the last ATR bar, and that's it. And here's another reason why I bought here. We had nested wedges, several wedges. It was a good MTR, but it didn't last long. Now I'm going to show you guys something else. Look at the overall structure. Always have a bird's eye view. Have one monitor dedicated. Okay, several days worth of RTH data on a chart. Nothing else. Just keep it clean, keep it naked. I call it a naked charts. So not even these highs and lows, yesterday's highs, lows. I'm just simply looking at the bars, okay, and the moving averages. That's it. Just take out the bar numbers, everything. So you have a bird's eye view. You're actually seeing structures, okay? Those structures are, it could be a trading range. It could be a breakout from the trading range, getting back to the trading range midpoint, moving underneath, started to swing. Maybe there is actually a trap there. So now you have a wedge bottom. So you're looking for the start of the third leg, starting point. Are we getting rejection and swinging? So you got to see these patterns on a clean or naked chart, the bird's eye view, to see where the market is going to go. So take a look at here. So we have a trading range and we have a breakout of the trading range. Also another trading range. So what you're seeing here is actually a bull trap. Where did we come back to? We came back to the midpoint of this trading range. Did the bears actually start to close bear bars? Yes. So what am I looking for? I'm looking for this trading range lows to be tested and possible trap, okay? Possible bear trap, and to go back up. So if you look at it, we did not have that trap, right? Here we tested. You have what seems like a bear trap, but it actually is not a bear trap. If you actually divide this trading range, right, this is the actual trading range, into 3 sections. We're testing, okay, the lower sections, so this is the upper section, middle section, and the lower section, that boundary line. And nothing's closing consecutively. So that is a great swing area. Therefore, it's a double top. Therefore, it's a spike and a channel. So it's a bear flag. It's looking for a double top. And it's also a micro head and shoulders, neckline broken. Great signal, pullback, and sell. So at the end of the day, we had a bear breakout. But all of that was signaling you that all that was going to happen was with the signal of give up bar right there, right? So and then what happened here? Look, bulls who were long decided to buy there, failed. Now they have another give up. They're not going to buy until they see something very strong. They see this somewhere around the support area, which is this right here. They might think that this sell-off into the trading range lows is actually owned by the bulls. And I actually wrote something like this on the Discord after I left the live webinar. I said bulls could be owning this move down only to reverse it back up, but you need follow through. So now if anybody stuck up here wants to buy, or anybody stuck up here want to buy and scale in and want to get back into this area at the minimum or up here. Okay, so how do they do that? Well, they're looking for a good bull bar. Now they put a buy stop order 1 tick above, but they never get filled. And then market comes down and takes out that bar. That right there is telling you anytime you buy, any good reason to buy, okay, maybe a second entry, you're not going to go up here. You're done. Because bear markets are already signaling you that this was a good, reasonable bar and expect follow through. First of all, the stop order entry bulls never enter the market. They had to cancel it because we took out that low now. We took out that strong bars low, even made a new low. So anytime it reverses back up, this gap is going to stop the bulls in their tracks, and we're probably going to make a new low. If you, how do I know this? I study charts to see what are the signals market is giving me. There's always an evidence, okay, on the RTA chart that I can tell the certain amount of hours left, like maybe last hour and a half, okay? I can see what option is it going to be a reversal back up to this triangle and the breakout point, or is this going to go only pull back and the bears are going to sell at a much better price and we're going to swing back down? This right here is problem number 1. This right here is problem number 2. That right there, when I saw bar 63, I took profit and I was done. I said, I'm done. I'm no longer bullish. I actually posted my chart and I made my case and I said, I'm not very thrilled with this bull run. I think we're just going to stop here and this could sell. So I'm ending my day. And then look what just happened. Market just came down. So here's another hint, okay? Structures. Bears broke that structure. So you have some kind of a measured move, okay? Maybe a conservative measured move. Maybe a much larger measured move, okay? I always start with the conservative and then I extend my way for the actual measured move targets. So and right there is bears own the market, right? And They take out that, but I'm looking for bear bodies. And I'm not just looking for one, I'm looking for consecutive bear bodies. This right here is not a good bear breakout. So I know we're going to get some really decent reversal back up. Maybe back up to these highs again, but that's about it. Why we're not going to go further up? Why we're not going to go back to this triangle apex? The answer is in front of you. Look at here. Do you see bull bars taking out these highs? Do you see bull bars? There's only one, but look how weak it is. Where's the consecutive bull bar? Where is the follow-through bull close? Do we have one? No. So there's no structural breakout here saying that market is not turning, the sentiment is not turning bullish now. This is still bearish. This is just trapping the bulls buying, okay, into something that is not bullish enough. And then they trap them. There's stops here. They go run those stops. When the stops run, there's another structural breakdown now. When the stops run, that means you have a valid measured move to the downside. You can sell and you can hold. Okay, so that's what those are the things that I combined with L. Brooks. But remember, a day like this has a version, okay, that it goes like that, comes back. Remember, I kept saying we're going to test the bar 17 lows, but if we don't break down, we're actually going to reverse back up. So that's one option. The other option is actually closing sideways like that. The other option is the bear option, and we got the bear option yesterday. So what does this mean? Towards the end of the day before I took off, I actually said that market is going to test, if they continue to sell this, they're going to test the 15.15, 15.14, or even further down to 15.05 or 15.03 area. So we have come down to the 14.15 area. Here's 14. No bear bars closing, so that's your hint to take profit. And today, market is right now around 55.27, so we're up here back into this trading range, but we could sell from there. If market continues to sell, we might end up coming down to like 04. I'm going to mark 03. I don't know if we're going to come down, but we might. Okay. So we have a bear flag, back up. We do have a wedge bottom here. So we're back up here. Not all the way up here, but somewhere here. We could come back down. Okay. We could form a inverse head and shoulders and then go back up. Okay, so if market wants to reverse today, because it's been looking for buyers and we're in an area on the daily where buyers could show up, okay, I said we're going to test here. If they're going to reverse this, now this might be a good place to reverse it. So now I'm going to look for a pullback at the open and see if that pullback holds around here. Okay, make that green. But if we start to move underneath this green line, market will continue to come down. So you want to see bulls holding here and then reversing it back up. Okay, that's what I'm looking for. Or we're going to open up bullish. We're going to open up around here anyway. So we are at 26.50. Where's 26.50? 26.50 is right around here. So it's like this, right? It might just go up, make a wedge, and then start to come down. I will see. So, all right, market is on. All right, we have a tight Globex session. Okay, we're back to the key level on the Globex. If we move under it, we're going to come down and test. That would give us a triple bottom, but also possible bear flag. Okay, bulls need to prevent this bear flag. We are right back to that green line. This green line needs to hold if bulls want a inverse head and shoulders. It doesn't look all that great pattern wise, so I'm not so sure if it's going to hold, and we could end up coming all the way down here before finding buyers. But if it holds, then we're going to go right back up. The news-wise today, we have 9 a.m. Case-Shiller Home Price Index came out, FHFA House Price Index, so it's all about housing market. And tomorrow is new home sales, so that's all leading into that. And then let's see, consumer confidence at 10 o'clock today. Richmond Fed manufacturing also 10 o'clock. And then you have a bunch of bill auctions, weekly, monthly, and noon. You have Lisa Cook, the Fed member, will speak, and then 2-year note auction at 1 p.m. right after her speech. And then money supply, I don't know what that is, but around 2:15, you got another Bowman Fed member is going to speak. So in the afternoon, starting at noon, a bunch of Fed members will speak. So that should speed up the price action. There's a gap here. Bears want to close the gap, so they want to come down to the close of yesterday with bar 81. They want to come down to the 55.14 and break below it, because they see still a bear flag, double top, lower high bear flag. Now, how would this bear flag be reversed? Well, we might come down here and make a double bottom and then reverse back up. It is possible that could happen. But first, I need to see how strong the bears are or determined to close this gap. Okay, so we have a fake breakout from the Globex high. This is 930 bar. Although, let me check something. I need to change this. This is actually before. So the Globex high is right there. We don't have a breakout from the Globex high, because this is the first bar. So if this area holds, then we could test the Globex high and break out from there. Then I would look for this gap area to be tested by bulls. But it's not yet decided. That's the breakout, but we don't have a bear close, so this is not really valid. For bears, we need a bear body closing below this line, and then you can say that, okay, I can expect this gap to be closed, or gap could close, and by the time you start to sell, they could start to buy. Bears need 2 bear bars. Bar 1 closed really nicely, but the second bear bar will say, okay, this is a trend from the open, but could be too low to sell as well, so they can still trap you because you do have a wedge bottom here. So I don't like to sell quickly just because bar 1 closed very strongly bearish. I like to see a follow through, so I like to wait for 2 bars or bar 2 to close before I do anything. And this has been also Al's recommendation many years, as I heard him constantly mention that how important it is for trader to wait for the first 2 bar to close before making any decision. Because you sell right now 100% sure that gap is going to close, only they can reverse it back up because market could be looking for a higher low reversal back up. And if you need visual cues, then that possible left shoulder, then you need to look for a violation of that left shoulder low, and that would be a bear body closing below that low. Then you can sell, but that would give you a second bear bar as confirmation. So at least you gotta wait, right? So we have a trading range open now. There's news coming up. Actually, yeah, 10 o'clock. So no, we still have 19 minutes for that news, so we don't need to worry about it. So we have the second bear bar, but it's not a good follow through. But it's still a bear bar. So we might need to pull back to the moving average to see if there are any sellers there. I didn't sell this at all, and instead I put a buy order 1 tick above 2. I bought it and I targeted the upper third of bar 1, and I took a scalp here, and I'm leaving a runner just to see if we can get above the open of the day. If we get above the open of the day with a bull close, I will hold it into open of the week. or last week's midpoint, which is right there, mid-range. Let me put it right here. It's the magnets, is 2 magnets, actually 3 magnets with the moving average. The one thing that is going for bears here is that the 5-minute EMA, 24-hour EMA is below the 1-hour EMA. That is bearish sentiment for the day, okay? That means when market goes up to the moving average or above the moving average, bears are going to look to sell, okay? Unless we start to close several different bull bars, break out to the upside, go back and test these highs. That's a whole different situation. That could still give us a head and shoulders, inverse head and shoulders, but any pattern can be invalidated. So you see why I scalped here quickly? Because although it's sideways, but it's a bearish sentiment, and bears are looking for a pullback, a good pullback to sell again. Unless we get above the open of the day and start to close bull bars, that puts us slightly into a bullish mode, and but still this area is resistance. So I see a scalp, not a swing, but once we start to take out the bar 1 highs, this is where my runner starts to make money, and I see another bull bar I might buy, but I'm going to be forced to scalp up here once again. So it's not clear yet, and they're still trying to close below the key level on the Globex to get a move down to the Globex low. That would give us triple bottom. So everybody else had the same idea, scalping at the upper third of bar 1, and not everyone is happy here. Bears want to close a bear body below bar 1 low so they can get follow through selling, but without closing a bear body, bulls will try to go back and test the bar 1 high. So this is the second time bears will try selling here. If they fail, we go test the bar 1 high. The first try was with bar 2, did not close a bear body. That is not bearish enough. That's why I did not sell. And they immediately bought above it, scalped at the upper third of bar 1 because this is a small trading range. Trading range, when you divide a trading range, whether it's a 1 bar body or several bars, upper third is a sell zone. Anybody who bought here will sell up there. Now, how do we get out of this trading range? How do we go test the bar 1 high? That's when the second sell fails, meaning second time we cannot close a bear body under bar 1 low. Bulls will then try to get above bar 1 high. If we close that bear body, then we're going to try to close this gap, close of yesterday, and low of yesterday become your target for bears. So watch that bar 4. If it gets a bear body closing underneath bar 1, you're going to get a bear flag formation, and the market will try to close this gap. So that's why if you go to the blog post and read Brad Wolf's post every day, what does he say? Before you take any trade, wait for 6 to 12 bars, half hour to 1 hour, to determine which direction the market is going to go so you can find a good high probability trade. It is okay to wait. Okay? So just in this 4 bar formation, people can lose their accounts because they revenge trade. They sell underneath bar 1, stuck, right? They try to sell above maybe bar 1, but maybe they are not quick enough to take profit. Or they buy it, they hold it, they don't know that they're supposed to scalp because they're in a limit order market. They hold it, now it comes back down, now they lost for the second time. So it's just, you know, sometimes you have to be sensible, not sometimes. You should be sensible all the time in your life before making any quick decisions. Anyone sold underneath bar 1 is trying to get a break even. They didn't get their chance with bar 3 because bar 3 opened here, came down. They could have exited there, but then goes up and closes higher. So anybody who sold there looking for a market to come back to bar 1 low once again. So that's why we're stalling here. There's a fight. If the bears get the hint that they're not going to go below bar 1 low with bar 4, they're going to quickly exit out. That could create bull bars. I don't know if that's going to happen. I just have to wait to see what's going on there. It's going to happen. I just have to wait to see what's going on there. And there's the 10 o'clock news. Yes, we're getting closer to it. About 10 minutes left to news. So there is I don't know if you guys counted, but so here is up, down, up, down, up. So you see that there's a wedge bear flag there. Kind of, but this bar hasn't really closed. I can't really tell for sure. But if you go to a 2-minute chart, see this spike pullback channel. We took out the pullback high, so that's not good for the bears. That means bulls will try to get back to the open of the day. So that should not have happened. This is the spike, this is the pullback channel, and when that is taken out, many will look for bull targets. 50% pullback holding, so if now the bulls can swing there, that would be lovely, but let's see. Can they do it though? That's also a triangle, so you're right at the apex of the triangle. Still, it hasn't really set up properly. It's 50-50 at the moment on the 2-minute chart. If you can't see things clearly, I could see this triangle on the 5-minute, but if you can't, so now they're making it look like it's selling, but this is a clue. This is a clue, okay, that if you sell now, they could just trap you and go back up. So to me, this is very dangerous. I stay out of this. Bear's still trying to come down to here. I don't trust the ledges on lower time frames like 1 minute and 2 minute. So basically, you're going to get these ledges like every other bar. There's a ledge here. The market could return to it, and that's why 1 minute could return there, because they're stuck traders. What is a ledge? Unfinished auction. Unfinished auction means they couldn't finish. They don't have buyers and sellers. They don't have a clear definition of who owned that auction. So they've set it aside only to come back to it. Okay, sorry, that's 1 minute. I should be on the 5-minute. So anybody who sold underneath bar 1, okay, they're trapped, so they're selling. They want to break even. And on the 2-minute or 1 minute, that was a ledge. So you can see why we could return back to the bar 1 low. So we would give some kind of a relief to those who sold and stuck. So that's a triangle right there. And that's the triangle breakout now. And the bears are getting their break-even plus now. It's also, I counted there as up on this, down on this with bar 2, up on this, down on this with bar 3, up on this, now down on this. So you have a wedge top bear flag. So bears got their wish here. Okay, so what about the bulls? I want to go back to 2-minute and talk about this bar. So now look, we went above, and that was a good clue for me to see if the bulls can actually go get a breakout to the open of the day or the high. They failed. So now bears are taking out that bar's low. If they close this bar bearish, we could continue to sell. So now I can structure a trade. It's going to try to close the gap here. But 5 did not close the bear body where it is. So a follow-through bar would be a lot better for bears. So there's a little bit more room to downside. We could go down and test the 16.25, maybe 15.25, 15 area. That's second leg down. Bears need a follow through bar. If they can't get it, what do you see that is failing to happen there? We still don't have, oh no, we actually do. Okay, so this is good for the Bears. Bar 5 actually did close a bear bar below bar 1, so the Bears won there. So now for follow through and close the gap, they need to close bar 6 on its low. We're getting very close to the news hour. That could reverse the market or continue to sell with the close of bar 6. Bears want a 10-point swing here, 55.16 and a quarter is their 10-point target. Bears want on the higher time frame close a bear bar below the key level so they can become more bearish and sell further into this gap area. There's a gap here. Some buyers are waiting in this gap, but we might target that gap. Bears want to close that gap and continue to sell and have a breakout from the Globex low, so they're targeting this area. So news can play a catalyst, we could quickly get there. Either we reverse from there or we're going to close this gap and we're going to continue to sell and we're going to get a expanding triangle. We could test the Globex low and maybe breach underneath briefly. So I did sell underneath bar 5 and I'm looking for a 10-point scalp and furthermore. At least a test of 55.15. Here comes news. 8 seconds. Watch out. You don't want to trade news. Anything's possible. I think the Bears want follow through. They want to close the gap. But there's no 15-minute bar closed below the key level. So this is still difficult. Bulls can still reverse this. There is no bear close, but I think it would be better if we could test this gap area. So I've collected with a little bit. I don't like to trade the news, so I got stuck in the news, but I have only one contract, so I lowered the risk. I was in with 3 contracts. I got 2 out and left 1. Now, if news turns around and reverses this, what I'm going to do is I'm going to sell higher and break even and exit. You should never trade news. You should wait at least 10 minutes or 2 bars or 3 minutes, 3 bars and 15 minutes. We're back to the apex of the triangle. Bears who were selling for 9 or 10 point kind of failed there. Bar 6 needed to go one more tick lower to give Bears a 9 point. So the Bulls are trying to reverse it back up and trying to create a failure for Bears. But those Bears are disappointed. We'll sell up here with the triangle breakout and we'll try to break even. So they're trying to bring it back down to the 5 low, which they did, so that's good because they sold there. So did I. So I sold again. I brought it down. I actually fixed that runner right there. So my runner is break even now, but I want to see where this bar is going to close. If it continues to come down, I don't need to do anything. I'll be making money, but if it closes higher, I'm going to have to exit. Some Bears are still selling. They're hoping to close the bar as low as possible, get back down to 5 low. It did come down. It actually, anyone who sold here, quick thinking Bears, they broke that bar all the way down to the 5 low, and then it just went back up. But that's not good enough for retail traders, right? They need bar closes. They can't think as fast as the machines. We have a wedge bottom, 1749.79 from yesterday, and we have a higher low. Bulls are trying to reverse it back up. So can they do that? Well, we'll see. We start to get bull bars closing on their highs. It is possible that we could go back to the open of the day, close above it, and become bullish. But what about the bears? Well, if bulls start to close bull bars above moving average and turn it into always and long, they will be, bears will not be in the market for a while. You still have a trading range. This is still a trading range. It's just expanding. But some will see this as a bull flag as well, right? But I don't know, I'm not very... I just want to see more bull bars here. Bulls can bring market back up to the magnets above. They were on their way with bar 3, but they had to scalp and exit out, so bears got their second leg. Kept the gap open, so now if we start to get more bull bars, we're definitely going to reach up here. Bulls trying to close above open of the day, become more bullish, but that has not yet happened. Market is going sideways. What happens is when market goes sideways, right, and the moving averages are parallel to one another, there's quite a bit of gap here. So I think bulls will try to push this up, but only bears will try to fade those bull closes. Right now, machines are trying to fade bar 7, but the gap is too wide. So it's between the two moving averages. So it is possible that the bulls could get another bar or two before fading it back down if they cannot fade right here. So it's basically bar 7 is leg in a trading range. Might want to go up a little bit. But the machines apply the rules, right? Look here, you got sideways, right? And we're below the higher time frame moving average. That puts us into bear sentiment. So look, they fade here, and finally they sell. So machines are doing the exact same thing when they see strong bull bar like 7 closing above moving average. They want to fade it, but they're in a scalp mode here. So what they do is they look at the ATR. If it's half the ATR is more than 2 points, it is, right? So it's 250 plus maybe, and then they go for at least 2-point scalp right there, right? So if you are, say you sold maybe 1 tick above, or you sold the close, right? So that you need 225 to make a scalp right there if you are a bear machine, right? They got it. So they want to close a bear bar and get a second bear bar. They want to move underneath the moving average. But if this bar closes on its side, that's done. They might step aside and the market could go higher, and then they will try once again. So that's why I expect if this is only a 2-point or 9-tick scalp average, and they step aside, we could get above open of the day. That's why this bar can get a follow through. So you got to know when you are in a scalping mode versus swing mode. Okay, for swing, I need bulls to give me consecutive bull bars, right? So I only have one, and it's a leg in a small trading range. See that bar 8 did not close all that great, so those bears are stepping aside. Bulls trying to get a follow through. Would have been better if the bar 8 was a bull bar. So this is still a danger. Now, how do we get a measured move to the upside with the stop below bar 6? If we start to get strong bull closes, okay, taking out that high with bodies closing like that, then you have a measured move set up. But we don't have that yet. Open of the week is magnet. Last week's mid-range is magnet. 1 hour EMA is magnet only if we get a breakout. Bulls are looking for a 10-point target. If I measure from here, maybe they have already gotten their 10. Oh yeah, they did get their 10, so that's why we're stalling here. The ATR is large, so 10-point is quick. So they might actually push towards 13, 14. I'm going to measure 14 average, so they might actually get there, either 1 point below or 1 point above 14. So they're trying to push into that. It's like 29 or 55.29 or 55.30 area. See if they can push this. Market is still pushing. It could test about 1 point below 14 or right at the 14 or somewhere in between. Open of the week is magnet. Somewhere in between. Open of the week is magnet. $55.30, maybe we could test. Can we make a double top here and come back down? Remember, I said this is probably going to go up a little bit before bear machines step back in and try to fade bull bars once again. Bulls are trying to get a breakout from the bar 1 high, and so if they that is not a good breakout. Look the way bar 9 closed, right at the high, not one tick above. But also bears, I don't see bears here, so they didn't start selling. They're still trying to get to that 10 point, 13, 14 point. Let's see, 31.50. I don't know. I've already scalped. I don't like the way the bar 9 body closed. Should have been one tick above bar 1 high with that body. So bear machines are trying to fade it. Like I said, it is possible that they could do that. So where are they? So that's 11. So they couldn't close a bull body to continue up to the next swing level, which is 15 point, 14, 15 point. They could. I don't know what they're going to do here. If the bar closes bearish, that means they are in a sideways market and they're fading good bull closes. So those bear machines are still trying to get back to the moving average and below. That's why I scalp. I would have held the position, but it's bar 9 did not close that body one tick above. So that right there is telling me we have not broken above the 10-point zone swing. They're taking profit. This is profit taking at the 10. Zone begins at 9 to 11, ends at 11. It could still go higher, but I have to wait for this profit taking, okay? There's double top above the EMA, so that's also possible bear flag. So you could see how this is getting stronger, so I'm glad I took profit there. Now, if suddenly it starts to close bullish, I'll jump back in, but it's just the way that it's set up, it's more bearish than bullish. And you have a wedge top now, 1, 2, 3. So it's also double top in this session only. So it doesn't look good for the bulls. So I'm in a scalp mode at this point. It's a trading range open. So it's already telling you that you're not going to get traction quickly. You may need to scalp and step aside until it sets up. The chart is going to freeze for a second. Actually, I have to relaunch the I have to close the application and relaunch, so just give me two minutes, please. Or 1, if I could do this in 60 seconds. There's a little bit more room to upside here. for bulls, but I am worried about bears here. So it's a double bottom, kind of a bull flag with a gap. Bulls want a breakout, but I'm flat at the moment. And because of this sideways price action, and 5-minute moving average is below 1 hour EMA. Bulls trying to get a follow through. That's good if they can. That would still become a small bull flag. We could get another bull flag, so I just want to see confirmation by bulls before buy again. So we have a trading range open, and its bear trap is, think of this as a bear trap. So the market is trying to stay above the moving average and get above the prior highs. So it could do that with several different bounces above the EMA. And then finally midday it gets a quick swing, but it's a small pullback bull trend. Unfortunately, it doesn't go no more than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 12 bars average, only to come back down. So we could be sideways and up here, but we are clinging to the EMA. We're not gapping above the EMA. So you can see when we gap above the EMA, the first pullback they buy again, is you look for new higher prices and you look for several flags, finally a good move up, but only to come back down. So we don't have that gap up yet, so we're still clinging to the EMA. Lots of limit order scalps, right? So we were down, we were up, right? So up, moving average holds, is bulls stay above, gap up a little bit, but they form some kind of a bear flag and it comes back down to the lows again. So, and then we have several legs up, but even though we close this gap, there are a bunch of gaps open here, and anybody who was long there get a break even, and then we just come back down and stay sideways into the close. So not a good price action at the moment, but the one thing that the bulls have in their favor is that the bears could not close a bear bar below the key level. So they're targeting up here, but they have to hurry up and get up there. So it's just not working out yet. Bar 11 is an inside bar, is at the moving average. You have inside, outside, inside, IOI, 9, 10, and 11. It's a breakout mode. It's also a bull flag, right? So bulls are trying to close a bull bar with the stop below bar 10 or 11, and they want to get back up to here. They could do that, but it would be better if this bar 12 closes bullish. So here is trading range open, several legs down, bears fail, and then the bulls, they have a gap here a little bit. We don't have it. That's why we're sideways. But eventually they do push, and that's a lower high double top, and it starts to grind down. It's kind of like not a major trend reversal, but it is a reversal, but it takes a while to reverse first. So it looks like bulls want to grind up, but I've done nothing here. This is a 1 bar trading range. I don't touch. So is bar 10 is an inside, I believe. They're identical tops with 9 and 10. Bar 9 is an inside bar. Bar 10 is an outside down bar. And then you have an inside bar. So that's IOI, breakout mode. You notice how 9 is inside bar 10 and 11 inside bar 10. And now bulls get that bar, so that you can see they're buying with the stop under 11 or 10. They're looking for breakout here, quick breakout. So open of the week is magnet. Furthermore, last week's mid-range and moving 1 hour moving average. These are all magnets. But we need a breakout. I have not bought anything here. I've not bought anything here. I didn't buy the close of 12. It's good for the bulls, but I don't have a breakout, so it's still, to me, it's still a trading range, no breakout. I'm just not touching this. So what happens to those who actually bought is one tick above 12 with stop underneath 10 and 11? Well, they're nervous, right? They have skunk stop, and those stops could be run over if this bar. Some will buy at the moving average quickly, and they're going to try to bring it back up to either 11 high or the close of 12 to break even. So you see, they just bought it right there. They're trying to get to the 12 close. If they bought it, that will give them a break even. They can exit out. It's still a limit order market, lots of scalps. It's very difficult to structure a stop trader. But if you do buy, now look what's happening. Market just gave you a beautiful break even. Now it's trying to go one tick above if anybody bought there with stop orders. But anybody sees that bar coming down, there's stop here, skunk stop. They buy here, they take the break even. They will take the break even, and this bar could close suddenly bearish. It's kind of dangerous. If it closes bullish, then there's nothing to worry about. Then it's going to get a breakout and it's going to go up. That's, I might actually enter. See how that's working out. Open of the week is magnets. Bulls need to get above it to become a lot more bullish. And then 33.25 is also doable. So bulls want this bar to close bullish with a bull body above the micro double top 9 and 10. So they can expect follow through. This is also kind of a spike pullback and a channel up. Bulls bought above 12 or the close, made money, and they scalped because they got nervous there. But if the bar closes bullish, their runner will run further up to the magnets. One or two of these magnets will be tagged. If all three tags, hey, that's great. If we start to get above the moving average, 1 hour moving average, this blue line, we're going to go get the opening range breakout measured move target, which is 55.39. Only if we close a bull bar here. If we fail, then that's not good. So you see how it's lots of scalps. And we are still clinging to the moving average, which is not good for the bulls. We have not gapped up from that moving average other than with 9 and 12. That's not really a gap up. Gap up. I like to see this up before coming down. So I like this bar to close bullish as possible and get us to one of those magnets above and then come down. So now you have an expanding triangle flag here with the apex right there. Bulls want to contain the bears right here. Bears want to come down and test these lows. This clinging to the moving average is problem. So you could see bar 13 did not close bullish. So everyone who bought there bought again with limit order scalped. If this was the close bullish, yes, we would have gone up here only to come back down again. So now it's still not clear. We're still clinging. Bears need to move market below the moving average to start selling or at least target this gap. As long as this gap is open and we start to get bull bars, it's kind of a small pullback bull trend, but it really is sideways trading range, sideways and up trading range. So it's just not clear for bears. It's slightly more bullish, but overall trading range with bearish sentiment. So when I see two-sided like this, is it bullish? Is it bearish? I can't decide what the heck. I'm going to scalp. I'm going to get half the ATR. If it's 2 points, that's great. But if it's not 225, then I don't have a 2 point there. I have probably a 1 point scalp there at best. Okay, if it was 450, that's 225 half. So that's 9 ticks. 9 ticks, there's two points in there. I can even structure a 2 point scalp there. You see how difficult it is? So you have like a 1 point solid scalp. Good luck with that. It's better to stay out of it and do nothing. Or is if we are above the moving average, and if you're targeting these highs, then buy strong, good bull close, or buy at the moving average, scalp, exit out. Buy at the moving average, scalp, exit out until we start to close bear bars underneath the EMA. So that's basically all you can do. Lots of scalps, but it is a bull flag. So now I need, if we can get that bull body closed, maybe bulls can get their chance here for a breakout. So there are several, let's find, right, here is a tight trading range, right? So this is the first touch. We might need to go in there. If the bulls get above this tight trading range, the next trading range they will be interested in will be right here. And the market can, if it becomes bullish, we can definitely go up here. But we have to demolish this and get above it with bull bars. Failure to do so, this inverse head and shoulders, which is kind of a lopsided, could fail, okay? And it could continue to sell. So I'm looking for bulls to step up, get above this level. If they fail, then I'm going to look for bears to take over. What's the trading range? So you should look at part 15 under Brooks Encyclopedia. Bulls still looking for, they got 1R, they want 2R, but they couldn't close a bull bar. You see why? They've taken profit. They kept going back to it. In order to get back up to here, they need to start closing bull bars. Okay, so bar 14 is not all that great, but they managed to buy at the moving average and then scalp once again with bar 14. We get the second bull bar here, then we are definitely going to get above open of the week. I will target this area is for bulls. Remember when we were here, I said there's a bit more room to upside. There is market is trying to go. Bar 13 tag that level for me, but if bulls really want to step up here, now is the time is they start closing bull bars. It's a difficult open, but you can see it's slightly becoming more bullish. They need to demolish this resistance, and once we get above it, they're going to use it as support to get up here. Only if we do that, only if we demolish this area. Otherwise, it's still, we're below the 1 hour EMA. We're going sideways. So the sentiment is still bearish. And the bulls are nowhere to be found. So they need to start showing up to turn the market bullish. Otherwise, bears can take over any second. We could have this today. Limit order market, bet on reversals. Okay. It looks difficult, but it's not. Look where the reversals took place. Okay. Is grinding up. They're buying at the moving average. and they're reversing strong bear bars underneath the EMA. They're trying to fade strong bull bars above the EMA. And then it gets a little bit of move up, but only to reverse back down with leg 1, leg 2, leg 3, or 2 legs down, or 3 small legs down. And then it just continues the cycle, and it's sideways and up, only to close at the moving average. Okay, so this could be also today, which is not fun, but it's a good exercise to test your limit order buy and sell and scalp out rather than swing. And if you really want to get good at this kind of trading, then I would recommend you guys to go and watch the bonus videos. Let me see if I can pull that bonus video. I think you would really, really like that video. It's under the Brooks price action course. Okay, scroll down, go to bonus videos. This is it. This right here is this 2, 5, and 6. Okay, and then go to the scalping series if you want to watch those. But really start with the 5 and 6. It'll open your eyes. All right, so we're still in a scalp mode here, and the bulls are not doing all that great. They want to move underneath the EMA, but there will be probably buyers waiting there. And they might fade the first strong bear bar. Bears see a wedge top 1, 2, 3, or 1, 2, 3 wedge top bear flag. They want to start closing bear bars underneath the EMA and close this gap right here and turn the market bearish. So I don't see that happening just yet. You got a double top, higher high, neckline 13, so they're trying to break the neckline 13, or neckline 10 low. They're trying to break those and keep moving down. So that means they have to close bear bars. It's not clear yet. We don't have a bear close yet below the EMA. You're not going to like this, but today could be us. This is what we're having right now. Okay. And then buyers show up underneath the EMA midday, and we finally get leg 1, pull back, leg 2, pull back, leg 3, sideways and down. Okay, so it is possible that buyers can show up once again. Now, how would you know the buyers would show up right here? Now, take a look left. This is a trading range, right? So see these right here, these wicks. I mark those wicks. And as it gets there, I have buy orders waiting, and I try to get in. And if I get this inside bar, I'll buy there instead and cancel these out. And that's where my stop is going to be. Anyone selling here, basically they're selling into the second entry short below 15 and looking for 2 or 5 or even 10 points down. So, but bulls are looking to trap. So here's your 225, okay, and the bears haven't really taken that profit, okay. So we might need to come down and test it before bouncing, or we're just going to trap them here and close a bull bar now. But anyone sold underneath 15 in their right mind, they want that target. So, and they're right to wait for it to actually tag. That's the minimum they could get. But you could also get 5 points, okay? So that's right there is a 2-point scalp. And you have that within, look at the ATR, 3.5. So it's telling you you have at least 9 tick scalp right there. Now, what about 5-point bears? They could get the 5-point. And that happens to be 10-point swing also. So you see, they're going for a 10 point, 5 point now from under 15. If you measure it the way the L measures, he will be looking for a 5 point scalp there probably. He probably already scalped that 2 point, and he might have a runner into it. And from the pivot, just to make sure the bears can get their 10 point swing, happens to be exactly the same area. So market can continue to come down here. Bar needs to close on its low below the 16 low to get follow through selling into 5 point. It could even go 525 to give you 5 point. So I'm going to mark 525. See if we can actually get there. So that's about 10 points. That's also 1R. Just about like same area. 55, 55, 20, 55, 20 and a quarter, or 20 and a half. So I'm trying to scalp the 20 and a half, like 2 ticks above this line right here. I don't know if I can get this follow through here. So a little bit more from bears would be great. Bears trying to close this gap body with bar 7, but they haven't yet properly. They have to overlap with bar 6. Bar 6 is a bad buy signal bar, so it's a magnet. We just tested its high, but we could continue to come down a little bit more. I like to see bears finish this job, tag this pink line or this blue line. It's a 10 point anyway. So I'm looking to scalp 2050. Bar has never showed up below the EMA, so you have 2 bear bars now closed below the EMA. So that's kind of always in short, and I'm looking for bears to close this gap and give me a 10 points. They didn't even get a 9 point here. So they kind of failed 1 tick testing 21.25. So they 10 point is 20.25. Just waiting patiently. Can it reverse back up and keep this gap open? Yeah, it can. I mean, bears actually accomplished something here, which is a tested bad buy signal bar 6 high. But I want an overlap, and I want a full 10 point because these bears really earned it. So, and they also earn a 5 point scalp from underneath bar 15. So I'm trying to be patient, and but it's just not quickly getting there. And that gap body with bar 7 is the problem. So it's not working out just yet, but there's still 50 seconds. 3 bear bars, 1, 2, 3. It's also the second leg now, pull back. Like to see bears finish the job, at least come down and test the 21.25 if they're not going to be able to get to 20.25, because they earned this. Problem here is that if they actually is able to come down that much, they close this gap. Okay, I don't know how this bar is going to close, but if it closes really bearish, okay, market could actually move underneath bar 7 and bar 6. Okay, so bears could not close this bar bearish enough, but it could be just a pullback, and we could get another quick leg down. Leg 1, pull back. Leg 2, pull back. Can we get the leg 3, or was this already leg 3? Well, if I counted traditionally, that's not leg 3, so just trying to be patient here still for bears to finish the job. I'm trying to keep you guys in the trade if you're short. bulls trying to prevent bears from closing somewhere down here, because that means they lose power and the gap would close. So they're trying to reverse it back up again, because they already bought and their stop is down here. They want market to swing from here to the upside, and that's a problem right there. But I am going to give bears a chance to sell the pullback to the moving average, quick double top bear flag, and finish the job. If they close a bull bar, I'll exit out. But it's still trying. Yeah, bulls fading, another good close from underneath moving average because it's trading range. But anybody who sold and was going for this, disappointed, they will probably gonna sell. Again, you got 3 bear bars, so this is a good limit sell area. But if bulls start to close bull bars, we go back to always long again. So it's very difficult. I think the limit sellers are up here waiting. So they are disappointed. They're trapped with bar 18. Bar 18 is trying to reverse back up, but bears did not get their chance to make money here. So all they did was 2-point scalp and some, but they couldn't get to their 5-point. There might be some sellers above bar 17 or even bar 16, 17, and they're not going to let go that easily. They want market to come down. 217 close is at least, but if the bulls close a strong bull bar, then that's it. We could go and make a new high. But it's a wedge top at the moving average. Market is trying to swing down. So I haven't really exited out of this short yet. Stuck bears are not happy with what just happened here with bar 18 and 19. So they're selling, like I said, they're limit sellers here, and they want market to come down here. So I would be careful buying until these bears break even. So the break even is the close of 17 or below 17. They just tested the close of 17. But if bears close the bear body 1 tick below the close of 17, they will sell more. They will want to get back to where they were going. But if this bar now closes bullish, that's 3 bars that could create a bullish momentum. And then you could see that break even is already taking place. It's just a matter of seeing how this bar is going to close. If bulls actually close this bar, it could create a bullish momentum. 3 bull bars, but that's 3 inside up. Bears could still try to sell. It's really scalps, bunch of scalps. Bulls want to swing back up here. They're trying to hold this gap open, and they're trying to now close the 3rd bull bar. You could see with bar 20, bears actually did get a break even. They tested the close of 17. So that right there is now a problem for many bears that are holding. But you have to wait for the bar close because it's 3 bars up, and you have to wait for the bar close because it's 3 bars up, and there could be still sellers here. If the bar closes bullish, then you can exit if you haven't gotten your break even. Bulls trying to get a good buy signal bar at the moving average. If the bar closes on its high with a strong bull body with almost no upper wick or 1 tick upper wick, many bulls will buy. But if it closes bearish, then you're going to be stuck buying one tick above 19 when bears are still trying to sell and bring it back down to the 5-point area or 525. So I need to see the third bull bar to decide whether I should exit out of this short. I don't have it, so I'm still holding. Wedged up at the moving average is possible swing for bears. They're trying to take the bar 6 low. They're trying to close this gap, but first I'd be more interested in 55.20, 55.25. I'm at 55.20 and 2/4. Sure is struggling. There you go. Let's go. Let's finish this job. Waited long enough for this trade to give me anything. I mean, it did give me a lot. I did scalp that 2 point. I'm just, I was looking for more. I had to sell again here at the high of 17 and 16. And I have a good break even there, but I'm not going to take that break even. I want to see bears actually finish this job so I can make more money since I sold for the second time. Now we have a second sell from the moving average, okay? First sell, second sell. And it's kind of it's a bear flag. If that fails, I'll exit. Kind of pushing my luck here. Yeah, it's failing. If the second sell fails at the moving average, bulls take over, and you get a double bottom neckline, and then suddenly you could get a lot of bulls swarming into the market. But bar has to close bullish above the moving average to say that's a second leg trap right there, or the third leg. I exited the short. I'm looking to see if the market, because this trading range open of the day is magnets, I want to see if the bulls can actually get above the open of the day this time and go test the bar 13 high. Bulls trying to go and see if they can test the bar 13 high. They're trying to get into 50% into the yellow zone. Open of the week is magnet. So open of the week is 31. We could go test 31. Okay, here we go. Open of the week is magnet now. Let's see if we can get there. So this right here, when I see the second sell failing like this, I don't linger. I exit. I actually reversed the trade and made it back what I've been losing with that runner. But you could see that bears really tried several times after getting trapped selling here, tried several times to get that break even. They got it. I sold here. I got the break even, but I didn't take the break even. I said I want a little bit more, but they failed. So I have to say, okay, I pushed my luck. I did what I could. I gave them a second chance. When a second leg at the moving average fails like that, I am done. As soon as this is an outside up bar, it's going to get a follow through. So open of the week is magnet now. There's several magnets now. It's the open of the week, the last week's mid-range, and the moving average. So you could see 2R is also doable, which is the moving average. So 34.75, 35 area, I think market is trying to reach. Yeah. So if we can get these bulls reach there. So I took that, what I've lost over here as a scalp, but I'm holding a runner now. And I'm looking for bulls to reach that 2R target right here. It's my now, I see them there swinging. So let's see if we can reach there. So 34.75 to 35 area above. And one of the, and you can see right here, that's the first sell below EMA, second sell failed, so they're buying, trying to get back to those prior highs. Is open of the week, that's great. We tested, but I want to see more from bulls. I like to see a follow through here, but it's a trading range. It's really nice so far. That was their 1 hour or measured move, so they got it. But we close above open of the week. We're going to get a follow through buying. So I just scalped a little bit just in case we fail. But and it was the measured move. This one already did. So I'm looking for my runner to run now. I'm still holding into here, 34.75. Possible 3.5 points up from here. It's that this trading range is still holding, but I like to see follow through buying. I'm looking for bulls to bring price up more next couple of bars, but it's still trading range trading, so the machines are still trying to fade, which is kind of upsetting because by now, you know, I would have hoped that we could get to these magnets, but it's kind of disappointing. But anyone who bought the pullback already disappointed, so they will probably going to buy somewhere here underneath 22, disappointed, and they will try to buy and break even and then look for market to move up to possibly, let me see, if the bulls can manage it, it could still go up to 33.25, 33 area. Bears trying to swing this because they see 1, 2, 3 wedge top here. So they're trying to bring market back down here. But bulls are stuck up here. They're looking for this target. Okay. So they're probably going to, I said, they're probably going to look to buy underneath bar 22, try to bring it back to the close of 22 at least. But in that capacity, they can actually reach these targets. So the next 2 bars, if the bulls can manage, they could still get up to the 33.25, 33.50 area, maybe even 33. What about bears? Can they actually start the swing? That's their second sell from this zone, which is still resistance. And we couldn't get above the open of the week, so that's kind of disappointing for bulls. But they also didn't get a break even here. So if I sell right here, they could trap me. But another bear bar closing on its low. There will be some buyers at the moving average. It's because they're stuck up here. But many bulls will be discouraged. So technically bulls have another, let's see, another bar to buy and break even. Bears see a bear flag and they want to swing down. They could do that, but they have to keep closing below moving average. So again, my runner is not running. So I'm getting in trouble today with my runners. And there are days like this that I will have runner always dying early, not giving me anything, no matter what I do. And those are the days that I know that I should be scalping, not swing trading. All right, so the bulls are stuck and they could be buying at the moving average, looking for a quick fix, or go back and test this high again. But two bear bars, especially if 24 now closes very strongly bearish, that's going to be discouraging for bulls, and they could exit out and this could suddenly come down harsh to 55.24. Some bulls buying at the moving average because they have to fix this trade, but the bar closes bearish, they will all exit out. So they're trying to push this market back up to the close of 22, bar 22. Okay, it's yeah. I'm gonna open up the question box in a minute. You can see that the bulls bought at the EMA, back to the break even. They're trying to get to the 22 close desperately. Bears want a second leg down. I'm not doing anything here. I got out of that runner. I didn't buy at the moving average. I simply took the loss because I need to answer some questions and I just didn't want to be bogged down. But bulls can still go up here. It's still a pullback. It's just that bar 24 is not all that great buy signal bar, is it? So that kind of discouraged me, and I said, look, as soon as it just closed up like that, it's closer to, it's just a couple of dollars, maybe like, what did I like, maybe $37 or something I lost with that runner. And when I'm losing, I want to lose less. I could take those little losses, it's no big deal. That's what the runner is for. But I don't want to take a lot. So it bounced and it closed like that, I just took the loss. But I can see that they're still trying to go up. I must have jumped the gun there. Maybe I should have held, but it has a potential of reaching and maybe even making a new high. Market now sees actually inverse head and shoulders that is a lot more definite, defined. Look at this one. If you don't count this, so they're looking to test these highs now. So market could reach higher. We'll still want the 34.75, 35 area. Could even accelerate and get to 36, 37 before sellers show up. We could get above the moving average. And if we do get above the moving average, we could reach around 39.40, 55, 39.40, possibly. But I'm more interested in these moving average above. See if they can actually make it there. And the 2R target right here. So that is 35. So I would like to see bulls actually take out the bar 22 high. Bears want a wedge top, double top lower high, and they want to swing down. They see double top neckline 24. They want to take out the 24 low. So they want a second leg down here. But we're above the moving average. We're getting closer and closer to the 1 hour EMA. If bulls want to turn the day bullish and go test this high and close this gap, maybe test bar 43, they're going to have to close bull bars and drag the moving average, small time frame moving average, above higher time frame moving average. Then you could suddenly start to see big bull bars. Otherwise, bears are trying to swing here with a second sell. So they're trying to close a bear body. And technically, they got their second sell here. But I'm not going to sell. because we are so close to magnets and 2R, so I'm going to wait for bulls to get up there. Because bears had their chance here and they failed, and bulls, they sold and probably broke even, and now bulls took over. They're still trying to get to, oh look, they actually did test the close. Look at that, that's a break even. Now we get a bull body closing above the close of 22, body close bar 22, bulls will accelerate and we will get to the moving average and possibly 2R. So 34.75, 35, possibly we could accelerate into 39 and 55.40 area, but I'm more interested in 55.34 and 3/4. Another target would be, see right there, breakout, test, breakout, and then comes down, and look, it tests the midpoint. That's the target. So market actually could reach this target first, 33, and then accelerate into 2R. So it is possible that we could still go up there, but bears are still trying to swing. I don't want to see a bear close here. I want bulls to actually take over and get us to this target. If you measure this way, that's the breakout point. Pull back and they're swinging. So I like to see bulls win here and get to the 33, get to the moving average. Moving average is now at 34. I don't know, Mike, how long you've been joining here, but I have been saying exactly why buyers are under certain bars or sellers are above certain bars. I think I'm pretty clear on where the break-even sellers or break-even buyers are. Why would they enter? Or where's the limit order buy entry or limit order sell entry? By looking at a couple of consecutive bear bars, I could tell where the sellers are, right? So I've been doing that. I've been pointing that out for, I don't know, since I've started working here. So I don't think it's fair for you to say that I don't point that out. I do point that out. I also point towards the videos that you can watch and learn on your own, because we assume that you already watched the videos and you understand the concept when coming in here. So we don't have to keep repeating the same thing over and over again. So I would definitely watch those videos. I would recommend you to watch the limit order versus stop order videos in the course, and then watch the bonus video that I pointed out today. Al has a really good scalping videos that explains where those limit buyers and limit sellers. Go look at the managing losses or how to trade part of the course, which is like the bottom of the course video list. You'll see it right there. But I am actually talking about why those buyers are there. Like, for example, I talked about why buyers would be underneath moving average and why we could fail, right? So we have a gap here. So what is a bull gap? Bull gap is a bull pressure. So what does that mean, bull pressure? That means there are limit buyers waiting there. If market pulls back with several legs, they can trap you there. And look what happened. They trapped you with bar 18. Bear sold. Remember, I said several occasions above bar 17 and bar 16, sellers waiting. Why? I said 3 bear bars consecutive. 2 bear bars. One of them closed really badly. Okay, strong. So there are sellers waiting there, limit sellers, and I even said I'm going to sell there, and I'm going to see if I can get market down here. Otherwise, it's going to be break even. I also said that bar 18 is a trap, bear trap. So anyone trapped selling there will sell up here and will get a break even. I believe I said all of those things. But if you missed it, that's okay. I understand. You know, there are a lot of things that we all say back to back. But if you want to catch up, definitely watch those videos. And every time I say buyers and sellers are here and there, it'll make sense to you. And I understand why you're asking the question, and I'm glad you're asking, but I believe I am mentioning those reasons. And just message me. I'd be happy to mark a bunch of charts if you like, is offline, and show you my thinking process if this doesn't make any sense here. When market is clinging to the moving average becomes a key price level. It's a fair price area where you could see they're buying, scalping. And we had a similar chart that I just showed earlier. Let's see if I could pull that up again. I think this is what we have. Market is still trying to make its way up. You could see right there. But eventually it's going to come down, but we could also do this leg is before coming down. So I'm looking for bulls to get us to 33, possibly 34, but they're not doing all that great. If I measure it this way, that's a breakout failed, came down and start to swing again. Seems 55.33 is a fair target, but it's still struggling here. Bulls want to test the bar 26 high. Bears want to test a 27 low. It's just stuck here right now. There could be buyers underneath 27 low because they've been buying at the EMA. That's leg 1. Leg 2 is they might be trying to either get a leg 3 or we're just going to bounce here. So from this high, that's a high 1 and high 2 above 27. It's also a triangle. It's also a bull flag. So market could break out to the upside, especially if we get another bull bar here. I don't have 2 consecutive bear bars to the left. So if the bulls can show up here, they can bring us up here before coming back down again. So I think the target is 55.33 still valid. Could even go a little bit higher to the moving average. If we start to close above moving average with consecutive bull bars, we're going to get a breakout. Okay, but remember the lineup. Okay, higher time frame above, smaller time frame moving average. So we're still bearish sentiment. This is going to act as resistance, okay, as we get closer to it, if we get closer to it. However, we start to get above it, right? And another one, that moving average is going to go like this. The first pullback, they will buy, and we could even get to the 2R, maybe even 3R, okay? But it doesn't start very quickly. Bulls still have a lot of work to do here. So far, these are my targets, okay? So they bought at the moving average with a buy signal bar 27, and above is high 2, like I said. So they're looking for retest of, like I said, retest of the 26 high and further up. So my target is still 55.33. Brad Wolf will come in about 10 minutes at noon. Don't go anywhere. I have the question box open. I have a few questions already answered. If you want to ask another question, I'd be happy to answer before I leave, since I have only 10 minutes. Yes, there's a small trading range here. So you have basically double bottom, possible double top, right? Bears want 2 bear bars to break down. Bulls want 2 bull bars to swing up. But I think that happened right here. So that was a failure of a breakdown, of a failure of a breakout, right? They try to sell with the stop here, but they fail because of this gap here. Now, bulls got 2 bull bars. So where do you think that they want the market to go? So if they haven't entered the long yet, they have buy orders 1 tick above bar 22, right? So it's still not clear. But if they start to buy, but too much time has passed, there's a time decay here. So I don't know, I would measure from here, okay? So normally I buy with a buy stop order, and nobody really start the buy. So there's now another tight trading range here, which is a barbed wire L used to call. So you got to give it a room. It could go up, it could come down until it finds a breakout point or breakdown. So that's why I said we need to test right there, which we did. Bears want to test down here, which they can. Bulls want to test up here and get a breakout. But bears want to reverse it back down. So technically we're still above the moving average, and the market has still an objective to meet, which is 55.33. So I'm going to wait for bulls to at least give it a shot. But that's also a flag. I mean triangle. So triangle is a flag. And we're right at the apex of it. So there's no direction yet. Bulls want to take out the 22 high. Yes, there is the ledge. 19, 20, 21 is market will go there and test it eventually. I don't know when. Right now, we still have an objective. But if we come down that much is right now, then that's not good for the bulls at all. So I think it would be better to go and test this trading range high first. But I don't know where the breakout is going to happen. But there is the ledge there, definitely. Bulls see a inverse head and shoulders, bit of a complex one. It's also triangle. So they're trying to go and test these highs. But there is that ledge I would definitely mark, and eventually market will get back there. But I'm more interested in test of here. Now, what's a context and what's a pattern? What's the difference? So context is, I have this checklist that I follow is every morning. Before the market open, after market open is okay, and 6 bars or 12 bars later, market open, which is what is the sentiment? What is the context? What is market doing in terms of where price action is on the chart in relations with yesterday's price action versus currently what's happening since open. So I look at the chart as what's my sentiment? Is it a bearish sentiment? Is it a bullish sentiment? Should I be a buyer? Should I be a seller? Which trades I should favor the most? What would be a high probability trade? If the 5-minute moving average is below 1 hour moving average, I will favor selling versus buying. Okay, so pattern recognition is basically, it happens late in the game, right? Price already moves. In order for a pattern to form and for you to recognize it, market has to move certain amount of points or print certain amount of bars to give you that pattern. By the time you recognize the pattern, it could be too late, okay, to enter a trade, or you enter a trade and it turns on you, okay. So pattern recognition is good, but it's not necessary to trade with. One can simply trade with leg counts, simply trade with second entries, simply even take a trade around the moving average with the right context, right? So, and still be able to make money. So, but the pattern recognition is basically something's happening but late, and by the time you recognize it, machines already recognized it. Okay, they might have already traded that. So you could be buying into profit taking or selling into profit taking. So it's always in the morning, look at the chart, okay, and try to understand what has happened last hour of the prior day. If the last hour of the prior day was bearish, okay, how bearish was it? Can today, 50% do we get a follow through buying or selling, right? So for example, look at yesterday's price action. after that was the third leg down. So do you think that we're going to get a strong sell at the open since this was the third leg? Probably not. But we are going to get, market will try to give you a 50% follow through selling at the open, which you got with 2 legs down. But then market is showing you something else, is both moving averages started to go sideways, right? So, and you got a small gap here, and the bears failed to close this gap. When a gap stays open at the open, that means if you have 2 legs move down or 3 legs move down, market will reverse, and you can buy into that reversal. And you can see the bar 7 being a news bar, it just accelerated up. So it's probably going to get a follow through a little bit. And it did get that follow through, but then it went sideways. So now it formed a pattern, didn't it? So what's the contact? Context to me is bearish, but sideways. But I see a pattern. Now it's a bull flag in a trading range, kind of at the upper part of the trading range. What happens to the bull flags in a trading range highs? They fail, right? We talked about this. I even made a presentation about it, right? It's in the course, right? So you get a bull flag. Did the bull flag fail? Yes, right? It came back down. Now it formed a different kind of bull flag, and now those stuck buying it, buying the pullback. That's why I said probably buyers underneath the moving average. Watch out, we could move above the moving average. One thing that I'm seeing the bulls are capable of doing is buying at and below the moving average and marking up the contract prices. So I know they're trying to go somewhere, and that somewhere is the top of this trading range, moving averages, right? So I can buy, scalp, leave a runner. So that's what I could do. Or when we were down here, I could sell, scalp, right, and leave a runner. But now we're getting bigger bull bars, sideways and up, so I should be favoring buying, not selling. But even buying, I have limited opportunity because we're still below the 1-hour EMA. This could fail, and it could start to come down, right? We have 1, 2, 3 wedge tops since open. 1, 2, 3 wedge tops since open, and we have a possible double top lower high might be forming. I don't know. I still have a target here. I want bulls to be getting that target, obviously, and even here, but it's not all that great for the bulls. All right, I am done with my session. Thank you for trading with me. I will see you guys tomorrow afternoon. You all have a great day. Stay around. Brad Wolf will join shortly. With me, I will see you guys tomorrow afternoon. You all have a great day. Stay around. Brad Wolf will join shortly.
Hey everybody, give me just a few minutes and I'll have the screen sharing. Lots of trading range price action so far today. And looking at today, what are the most important things for right now? All of this trading range price action. We've had a lot of trading range price action today. Here's the low of yesterday. And we're probably going to go above this major higher lower high at some point. But right now, we're fairly neutral. 15-minute chart. Just look at it. Lots of overlapping bars. Whenever you get a lot of overlapping bars, you know the market's in a trading range. Therefore, whatever rally you get, like over here, this 1030 rally, which was right here, bar 2122, deep pullback, and it's had two legs up. And whenever I see this kind of trading range price action, I start to be more and more cautious. This is not at all what I want to see if I'm looking for a swing. It's great if you're willing to trade with limit orders, buy below bars, sell above bars, and scalp. But those kind of trades can be, you have to understand what you're doing because it can turn on you pretty quick. So what do I think is going to happen? I think we're going to go sideways. We may try and test down back to the 21 low or the 18 low. We have the open of the day right here, and that's probably going to be a magnet for the rest of the day. So there's the open. Bulls, can you call this the start of a small pullback trend? I don't think so. Bulls are doing a good job getting bars above the moving average, and we still may get a second leg up after 21 and 22. This is really not what you want to see if you're looking for a swing trade. Increases the odds that the market goes more sideways. I'll turn the question box on, and I'll take a look at it. Well, it's already on. I'll take a look at questions here in a little bit. All I've done today is 5 or 6 limit order scalps. When I see the market doing this, it's kind of, my targets are typically small, and I want to be in and out of the trade in a matter of a bar or two. Bears, they want this to be a wedge. 3 pushes up, 1, 2, 3. They want it to be a truncated wedge with 30, and they want a couple of legs sideways to down. What about buying? And you had an inside bar with 32. So you can argue 33 is already a second leg down from 31. Bear breakout 31, pullback 32, second leg 33. What about buying above 33? You can take the buy for a swing, but middle of a tight trading range after 3 consecutive bull bars, and it's probably going to be a 4-bar micro channel. I suspect probably sellers above 33, especially if the bar closes in the upper third of the bar. So I'm really not all that interested in buying above 33. It'd be different if this day was clearly bullish in a strong bull trend and we were at the moving average, but here we're not clearly bullish. We're right at the open of the day, and we could easily break to the downside. Bear bar 33. May get a small second leg down, but really not all that strong. Bears need more, and they're trying to get it here. And they might. We'll see. It'd be better if the bears can get a second consecutive bear bar closing on its low. So not quite always in short, but certainly damaging for the bulls. Would I sell on below 33? I would not. I'd rather wait and see at least one more bar. We have a close below the moving average. It would be better if we got follow through below the moving average. Possible double bottom with 24. So I'm just not yet convinced that we're always in short. I think we're trying to be. I think it's a strong enough sell-off from the 30 high that we'll get a second leg down, but we could easily get a deep pullback first. And that's what the market's deciding. Bears, they're trying to get a strong follow-through bar after 32 on 34. They're trying to get a bear bar closing when it's low. The bigger the bar, better for the bears. But so far, not a lot of energy, not a lot of traders desperate to sell after the close of 33. The bears want a second leg down with 34. So they want sellers above 34 and lower prices. Disappointing close for the bears, but we broke out below 33 a decent amount, and that increases the risk if there might be sellers above 34. So as far as buying the close of 34, I don't think it's really that ideal. We're collecting bear bars, 5 consecutive bear bars. It's disappointing that 34 closed above its midpoint. The bears, they want a micro gap. They want a gap 33 low, 35 high. That would increase the probability of lower prices. So this is what the bears are hopeful for. It'll probably close, but they want that gap to stay open and test down to the 18 low. Becoming always in short, disappointment 34. So the bears, it'd be better for the bears if they can get 35 to close below 34. The risk for the bulls is that the channel is getting a little bit too tight, and that is problematic for bulls looking to buy here. You can see that gap stayed open, this measuring gap right here, or this open gap, 33 low, 35 high. That increases the risk that we might get down to this target. We can still go lower, maybe down to the 6 low. That's a possibility. Why the 6 low? Because it's the low of the day, and the range isn't all that big, and therefore we may have to test down. We may try and test down closer to the low of the day. So this is a problem for bulls. Bulls who are long, buying anywhere, buying the 33 low or the 24 low, they're now trapped into a losing position, and that'll increase the probability that we go lower. I think we're always in short at this point. So the next thing I want to see is strength. Remember what I've always in a trading range. A good rule of thumb is when the market appears to be always in long and you're in a trading range, usually the market will reverse shortly after. So here we're becoming always in short, but we're in the bottom third of the overall range. And the risk for the bulls is that once we become always in risk for the bears is once we become always in short, we reverse. So what do the bears need? They need strength. The bears need reasons to stay short. Otherwise, they'll start to look to scalp out, like a test of the 18 low. You can see we're getting buyers below 34. So that's disappointing for the bears. Bears, they need a decent close. Close below the midpoint would be ideal. Close below the 34 low, that'd be good. It'd be better if this bar closes on its low. Otherwise, if it doesn't close on its low, we'll probably get a pullback. But I suspect sellers above 35 high. And at least a small second leg down after the micro channel from 30. Tail on 35, disappointing for the bears, but a close below the 34 low, so that's good for the bears. What about buying 35? You're buying after several consecutive bear bars, and therefore I think it's really not ideal. You'll have some bulls buying, but I think they'll probably have to look to scale in lower. Not ideal for the bears, but I think there's probably sellers somewhere above the 35 high, maybe the 36 high, somewhere around the 33 low, the breakout point. Right here, might be sellers in that area. Bulls, they want to close the gap, 33 low. Because of the micro channel, we may get a lower high. So I'm not quite confident that 36 is going to go straight up. Whenever limit order traders who buy an area like 33 and they get trapped with 34, it's very common for the market to test that price level. Another way to think about that is whenever you get a gap low of 33 and the high of 35, it's common for the market to try and retest that price level, and that's what we did on 36. I think we'll probably get at least a small second leg down. But right now, the question is, do the bears have enough strength to get down to the 6 low? The one thing the bears did a good job of just now is preventing the bulls from triggering a buy. So we have an inside bar, a little bit disappointing for traders. Low 136, but a micro channel. I think we'll probably get a small second leg down. Looks like we're going to the low of the day. So let's see how this bar closes. We're so close to the low of the day that I suspect we'll probably get there. But it is possible we have to pull back first. This is rather disappointing of a bear breakout. This is rather disappointing of a bear breakout. But strong enough surprise, I think we're going to go at least a little bit lower. I sold during 34, taking a chance that bulls were giving up. And in situations like that, my expectation is a second leg down. So here, I'll sell during the breakout, and my expectation is basically the logic is it's a micro channel, and 33 bears need one more bar. We're breaking out. Limit order traders, limit order bulls are disappointed. Therefore, we'll probably get a second leg down. And my expectation is the first reversal up will fail. Here, 36 tried to reverse up and it couldn't do it, and then we broke to the downside. These are emotional. I call bars like 37 emotional bars. What I mean by that is it's a surprise. It's a big bar and it's a climactic bar, so it's got a sign of urgency. Look at the open of the bar. It's basically the high of the bar is almost the open, so it went straight down. But bad signal bar 36, and it's forcing you to sell at support. So for me, I'd rather look to sell. I'd rather see the breakout. To me, this is a buy zone. What about buying here? Well, you've still got the same problem of the micro channel. A micro channel is a breakout, and the channel down at 37 is tight. And this is the 15-minute chart. Obviously, a tight bear channel. Want to see? We did not reach the low of yesterday, and it's possible we try and get down there. I'm not convinced that we will. So this is an example of 37. Are we always in long, always in short? We're obviously always in short. But once you become clearly always in short in an overall, once the market's clearly always in short and you're in a trading range, you know what I'm going to say. That's my concern. My concern is, oh, we're clearly always in short. Therefore, a lot of traders will use 37 to take partial profits. I still think we're going to go at least a little bit lower, but we might pull back first. That's why I wanted to sell up here, where there's distance to the downside. So that's the challenge of trading ranges. You know the downside's limited, and you almost have to, what traders do is they'll front run the breakout. As soon as they believe the market's starting to break out, they'll start to sell. But they'll be very quick to exit because they know this is not a strong trend. Strong trends, you can just sell all the way down, whenever you want. We had an example. Let me turn off my screen. I'll just pull up some slides. At the moment, I'm trapped out. I debated holding part of my position, but trading range day, I really try my best on trading range days to just scalp out of everything. Here's an example, strong trend, traders just sell all the way down. You had a big surprise and traders just sell. That is not what we have right here. Big enough bar will probably go a little bit lower. Always in short? Yeah, I think so. But we're at support, and you see what just happened? We triggered the sell below. We went below the low of 6, and we're finding buyers. What about buying the 37 close? You will have traders buying the 37 close, but those are limit order traders. Those are traders who look at 37 and they think, they look at the bar, the midpoint of 37 is 20.5, and some traders buy the low of 36 and they set a target at 20.5, the midpoint of the bar, betting that the market will pull back. You also have limit order bulls who bought the 36 low, the low one. What do you think is going to happen? Do you think those limit order bulls who bought the 36 low are going to be able to buy more lower and make money? Sure they are. I think the odds are they probably will make money. Trading range, price action, by the time the market becomes bearish, clearly bearish, like 37, everybody gets disappointed. You see the 18 low, all of these are magnets. Some traders bought the 18 low, some traders bought the low right here, and they scaled in. Now what could the bears do to cause bulls to panic? I'm always thinking about trapped traders. So if I'm going to sell a bear breakout low in the range, I want traders to be panicking out of their position. And right here, it doesn't look like a lot of traders are panicking out of their position. And that makes me think that we're probably not going straight down. Crude oil data on this chart, on this account, but I do not. Daily chart, euro versus the dollar. Consecutive sell climaxes, testing the lows, big bull bar, but disappointment. I think yesterday's big bull bar is strong enough that we'll probably get a second leg. So I think there's buyers below today's low. Okay, what do always in traders do? If 38 is a bull bar, I think the always in traders exit. This is disappointing and increases the chances that we pull back. As far as buying above 38, if it closes on its high, you can take it for a swing, but it's really not the most ideal thing. Traders are hopeful that this is an expanding triangle. Call it a wedge if you want. 3 pushes down, 1, 2, 3, double bottom with the 6 low. That's what traders are hopeful for. But the channel down is tight. Micro channel from 30 to 38. An 8-bar bear micro channel in a trading range. By the time the market actually pulls back above a bar, usually you get a deep pullback. So for me, I'm really not eager to sell here. I'd rather wait and see what the pullback looks like and then look to sell. What about those bulls who got trapped on 33 or 32 in this area? Well, what do you think is going to happen to them? Do you think those bulls are going to lose money? Obviously, if they got out here, they lost. But a lot of traders, they understand that the reality is we're probably going all the way back up here. And that's the concern for traders. Traders don't want to be short and have the market pull back all the way up here. So for me, 38, big enough bar. If I was still short, which I'm not, I would get out above 38. Too much risk that we have a couple of legs sideways to up and get to the moving average. If traders were desperate to sell here, then I'd be more willing to sell. But it does not look like they're all that desperate to sell. So really not ideal for the bears. Always in bears, I'd get out above 38. And swing bulls, they can buy, taking a chance. It's a double bottom with the 6 low. However, probably going to be disappointed. When you take a swing trade, 40% of the time, you get a big swing many times your risk. 60% of the time, you end up exiting the trade earlier. Small winner, small loser. Some bulls, they might buy a 50% pullback of 38. Sell the closed bears, they sell 37, disappointed with 38. Maybe they sell more above 38 and they try to get out break even, which would be around the midpoint of the 38 bull bar. Outside down 39, but probably buyers below 39, and we may pull back for a few bars. We're getting bad follow through and consecutive sell climaxes 35, pull back 36, sell off 37, pull back 38, sell off 39. Bears trying to break below, they're breaking below the low of the day. But consecutive sell climaxes increase the risk that we pull back for at least a few bars. That's what I was talking about. Really not what you want to see if you're a bull. If you're a bear, for me, you're always in bears. I'd be out at this point. 40 is a failed breakout of the low of the day, the 6th low, test of yesterday's close. Really big tail below the bar. Increase the risk that we're going to bounce, and we're probably going to get up to the 38 close. It is reasonable to buy the 38 close, especially if you use a wide stop and scale in. Odds are we'll probably get back to the 38 close. So the bulls buy the 38, above 38, use a wide stop, scale in lower, probably going to make money. But you can see how buying 38 really not all that ideal. You buy it. If you had stopped out here, there's no decent stop entry other than just buying as it's going back up. So a lot of traders, if they're taking this buy, they use a wide stop and scale in lower. If you are long, I think it's okay to probably take half off or all back at the 38 high. Probably going to get there. I suspect we're probably going to go sideways and test the 38 close and the moving average over the next couple of bars. Breakout pullback sell, good for the bears, but consecutive sell climaxes here, here, here increases the risk of buyers below 41 or 40. I think we're still probably going to try and bounce, at least for a few bars. Bears have done a good job with the sell-off, but they've allowed too much overlap. And the bulls, they're making money with limit orders. By bulls that bought below the 38 low and more lower made money. Bulls who are buying below 41 or lower, chances are they'll make money. When limit order traders start to make money below bars, it increases the risk that we end up getting a pullback. Bears, they want a measured move from the high of 30 to the 35 low down here. What are the chances that we reach it? And we might, but I think it's pretty tough here to be short. You're selling after consecutive sell climaxes, and you're far from the moving average in an overall trading range. That increases the chances that we're going to bounce. The upside's probably limited, but this is enough sideways trading that I think we'll probably pull back and test the 38 close. Whenever you do something reasonable, even something such as buying above 38, although it's buying the first break of the micro channel down, it's a strong looking bull bar in an overall trading range day. And whenever you take a buy above a strong bull bar like 38 and you're willing to use a wide stop and scale in, the odds are you're going to get back to your original entry price, which is the high of 38. And that makes me think that the odds are we'll test back up to this close. So we're probably going up to that red line over the next several bars. I would get out. I think bears get out above 42. too much risk that we get a bounce. You have bears who sold the 41 breakout pullback sell, and they're disappointed by their entry bar 42, and they may use 43 to buy back their shorts on a test of the 41 low. So I suspect there's probably buyers around the midpoint of 42 in the low of 41. Probably going to bounce. Bulls buy above 38. They'll probably buy more. It's reasonable for them to buy more above a bull bar like 42. The bears are trying their best to prevent 42 from triggering, because if they can prevent the bar from triggering, then that will increase. Next, they want to try and trap limit order bulls. They know that there's stop order bulls who have entries or stop orders to buy above 42. And there's also bears who have protected stops above 42. And so the bears are trying their best to prevent 42 from triggering, adding to the buying pressure. They want to prevent 42 from triggering, which would add to the buying pressure. What about selling below 43 if it's a bear bar or an inside bar? I think you're in a buy zone. I think it's really difficult to be selling down here. More overlapping bars. With all the bull bars that we're getting during the sell-off, it makes me think there's probably buyers below 42, buyers below 40, scaling in lower, and even buyers below the 43 low. So really not all that ideal. Bears trying to get down to yesterday's low. But we're so close to it that we may get there, but I'm hesitant to say that we're going to get there on this sell-off. We've just had so much overlap, and that makes it really, really difficult for the swing traders to stay short. Every one of these bull bars that gets added increases the risk of a bounce, a pullback to the moving average, and still a pullback to the 38 high. So risk reward is the real challenge. A lot of traders don't want to be selling here and have a stop somewhere up here. Because if you just think about it like this, if you're short, there's no such thing as other people's money. Every tick, even if you sold here and the market's down here, it's your money. Therefore, you have to treat it as if you're short, every tick that goes lower is money in your account, and you can't lose it. The problem here is risk reward. Traders that are short, let's say they're short down here on the close of 41, 1 times the risk is all the way down here, and the odds are against the market getting there. And therefore, traders have to reduce the risk. And one of the ways to reduce the risk is to tighten the stop or exit the trade. This is what I was talking about. Too much buying pressure. And the reality is, I don't think many traders are eager to sell after all this bad follow-through. The bad follow-through started with 36 and 37 and 38. 38 is a disappointment bar. Whenever you get a breakout like 37 and then you get a bad follow-through bar like 38, 38, everybody sees 38 as a retest bar later. It's kind of like it's the start of a channel. In other words, traders immediately see that we're in a trading range. We had a bear breakout trading range bar, and they don't even care. Even though you will have some traders buy above this bar and just scale in all the way down, betting that the market's in a channel. The worst case, and channels evolve into trading ranges, which means the odds are we're probably going to test the top of the channel, which would be the top of the trading range, or this spike in channel. So that is the challenge that the bears face right here. You can see bulls weren't strong enough to trigger the buy above 42. But what happened below 42? You had more bulls buying. I think it's a big mistake to buy the close of 42, or let's say you just bought it as soon as 42 closed, you hit buy the market. It's generally a mistake to put a stop 1 tick below the bar, 1 tick below its low. Generally, I like to use a stop, a bar range below the bar at a minimum. especially in trading range days, because it's very common for the market to fall below the bull bar in this case to trigger the stop and then immediately reverse up. That happens all the time in trading ranges. So targets, I think the first target is the 38 high. I am long, taking a chance that we retest the 38 high. And that was an instance where I used a wide stop. Always in traders, I think always in bears get out above 44. Someone asked, what kind of stop do I use in those situations? It's wide, and it's a little bit tricky. The reason I say it's tricky to explain, because one logical idea is if I think we're going back to the low of this bar, I'm not going to put a stop at a bar range below 38, because if we fall there, there's going to be buyers. So the way I look at it is this. I think through, if I'm long, let's say if I'm buying somewhere the 39 low, let's say, if I'm buying the 39 low, I want to use, at a minimum, some stop down here, probably below the low of the day. And the way I'm managing the trade is I need to see the bears get stronger. In other words, my premise is we're in a bear channel here, and it's going to evolve into a trading range. And because of that, since bear channels typically evolve into trading ranges, I need some sort of sign that we're getting a bear breakout that's breaking out below the trading range and going to go lower. I think most traders are better off waiting for the stop entry. Big bar 37, not a good buy above 38. Wait for a stop entry buy above 42 or 44 and put a stop maybe a bar range below, or just put the stop below the bar. We're so close to 38 that we're probably going to get there. Do we have to stop at the 38 high? No, we don't have to stop at 38 high. We're in a trading range, and that makes me think that we may end up going further than the 38 high. We can test all the way back up to here to the open of the day. All of those are reasonable. Consecutive bear bars, strong enough that we'll probably get at least a small second leg up. Good for the bears, probably going at least, good for the bulls, probably going at least a little bit higher, right at the moving average and the high of 38. So we may get a pullback here. But I suspect buyers below 46. You can see bears using the 46 sell-off to buy back some of their shorts, and bulls using the 46 sell-off to enter at a reduced price or enter on a pullback. Probably buyers below 46, scaling in lower. 60-minute chart. Strong breakout, deep pullback, and we're starting to form a bottom here. We're attempting to. So I suspect we're going to go above the current 60-minute bar when it closes. It closes in about 10 minutes. So the open of the bar, let me change the style so it's easier to read it. Open of this bar is 23.25. Let me just move this red line. We met the target 38. So 23.25 is right here. So if we get above, obviously it's going to be, if we get above this red line, that will be the open of the hour. And I think we're probably going to get there. Bulls, they want to close far above the 37 high. top of the sell climax, which is also the open of the current hour. Inside bar 46, you can call it a breakout pullback buy or a high one buy setup, but after consecutive bull bars 44, 45, probably going to go at least a little bit higher. So I think there's probably buyers. Well, there might be sellers above the 46 high. I suspect there's buyers around the midpoint and the low of 46. So I suspect the downside is probably limited, and we'll probably get at least a small second leg up after 44 and 45. Bad stop entry below 47, so probably buyers below it. Since it's a bad sell below 47, it's possible that we don't trigger the sell and we just go straight up. But if we do trigger the sell, I suspect buyers below 47. Why do I say it's possible we don't trigger it? Because if traders see 47 as a bad stop entry short, then you'll have a bunch of limit order traders trying to buy the low of 47, betting that there's buyers below it. And if it's an obvious bad buy, it's possible that we don't trigger the buy. We're at the moving average. That's good for the bears. But strong enough rally, 44, 45. I think the odds are high. We're going to go at least one tick above the high of 45. And like I mentioned earlier, I think the real target is the high of 37, is the open of 37, which is the open of the current hour on the 60-minute chart. And I think that is where we're heading. I'll make it red and green just so we can see the color if it changes before the end of the hour. Bears, we have about 3 minutes until the 60-minute bar closes. And we're about 2 points, a little less, about maybe 5 ticks at this point from the open on the 60-minute hour. So let's see what we get here. Okay, we're at the red line. So it's the 60-minute bar. We got a minute left in the 60-minute hour. Are we going to have a bull trend bar and close above the open of the hour? Or is it going to be smaller? Or, excuse me, is it going to be a bear bar and close below the red line? It's actually wrong. We have a minute as of now. 15-minute chart, great example of the disappointment a trader can face in a tight trading range. Here, basically an expanding triangle, however you want to draw it. Lots of pushes down, lots of pushes up. But the point is, big sell-off at the bottom of the range. It's not a sell to close market down here. And if you are selling, it's very aggressive, and you have to be very quick to exit the trade because this can happen. Now you're getting a reversal, and we could easily rally all the way back up here. Probably going to get to the open, the green line. Strong enough bar 48, probably going higher. Some traders would like to see the follow through, but you can see we formed a bull bar on the 60-minute bar. We just triggered the buy above the 60-minute hour. It's common for the market to trigger stop entries and pull back. Bears, they're hopeful that the prior hour, the high of bar 48, is a bad stop entry buy and that there's more sellers above. But even if there are sellers above the bar, I suspect there's buyers around the midpoint of the bar, which is basically the midpoint of this rally. The low to the high. Midpoint is around here. So even if we sell off to 45.18, which we very well might, I suspect there's buyers below. 45.18, which we very well might, I suspect there's buyers below. For me, I'm only interested in looking to buy a pullback right now. I'm not all that eager to sell. A better way to state that is I'm interested in looking to buy. Even if 49 closes on its low, I suspect probably buyers not far below the bar. So probably a minor reversal down. Bull bar 49, but I suspect probably buyers below and at least a second leg up. We may try and get to the open of the day. Some traders bought the close of 48, disappointed by the pullback on 49, and they're deciding what to do here. That's part of the reason why 50 rallied and bounced, rallied and pulled back to the open of the bar. I suspect their breakout above 48, breaking out above the moving average, is strong enough for a second leg up. So I think there's more buyers up here than sellers, even if we have to pull back first. We're so close to the open of the day, and the day has been an overall trading range day, that the odds are we're probably going to get to the open of the day. So I think we're going at least a little bit higher. One thing to think about is the bulls successfully prevented the bears from getting below yesterday's low. And the bulls want this to be a second entry buy on the daily chart. Tight bull channel, bulls want a bull bar closing on its high, and they want to rally up to 5,600. And we're right at the open of the day. And we have about, I think odds are against it that this is going to be a strong bull day. But if we get a strong breakout follow through and close somewhere up here, this will become, the daily chart will become a rather bullish bar. So we have about 2 hours left in the day, and that's what the bulls want to accomplish. But we'll see. I suspect, what do I think is going to happen? I suspect it's going to be disappointing. Look at this rally. Consecutive bull bars, 44, 45, bad follow through 46. Bull bar 48, bad follow through 49. Forming a little bit of a parabolic wedge. But we're so close to the open that I suspect we're probably going to get to the open of the day. Parabolic wedges are minor reversals. And because of that, the chances of this leading to a successful wedge is fairly small. The odds are, and when I say successful wedge, I mean a reversal, not a wedge that transitions into a trading range. Here, when you get a parabolic wedge, they typically get trend resumption because the market often will just go sideways, form a tight trading range. But this is strong enough that the odds favor trend resumption, and we get a bull break out of that tight trading range. Here, my issue is open gaps. So I could draw this, but I'm more interested in seeing this. That green box represents an open gap. Open gaps increase the risk of getting higher prices. We have the obvious magnet above the open of the day. Chances are we're going to get there. That's why I drew that box. Increased risk of higher prices. We're at the open of the day. That is good for the bears. But tight bull channel reduces the probability for the bulls. Bulls trying to get to the high of 30. Looks like we're going to pull back fairly soon. At the moment, I'm flat. I was long. I took final profits around the open, and I really don't want to buy all the way up here. I'd rather buy closer to the moving average. We're still in a trading range, and I don't want to lose sight of that. Because we're still in a trading range, I want to be aware of buying too high. It's like the measured move target. Low of 40, close of 45. Takes us a little bit higher, so we may go there. Why the close of 45, low of 40? Arguably, we were always in long on the close of 45, and it's reasonable to put a stop below the 40 low, the 44 low. And so that's why measured move target up there. Probably going to go a little bit higher, but body's getting a little bit smaller. We might pull back. Tight enough bull channel that I do think the first reversal down is probably limited. We may have to pull back for a couple of bars here. They're really not ideal for buying this high up. Although Even if we do pull back, I suspect buyers not far below. Starting to pull back. Even if we do pull back for a couple of legs, I suspect the downside is probably going to be limited. Well, I think the market is going to pull back. We're in a small pullback bull trend or bull rally. We're not in a bull trend, obviously. We're in a trading range overall. But this rally is getting small pullback characteristics, and that increases the chances of higher prices. And that's why we're going up here. But as far as buying at the market, I don't know how many traders are all that eager to be buying high in the range. More likely, we're going to start going sideways up here. The one important thing to realize is the open gaps. And that makes it more dangerous for traders to be selling above bars. Open gap here, open gap here. That increases the risk of higher prices. Bears, they really need to close those gaps. There you go. Traders are giving up. Increase the risk that we're going to go at least a little bit higher. You can see bears that sold above 55, bears that sold above 56, they got trapped on 57. Bulls want 57 to be strong enough to lead to a second leg. Bears, they're hopeful that traders will see 57 as just a failed breakout of a bull channel. But lots of open gaps increases the risk of higher prices. Disappointment bar for the bulls on 57. However, it's a bad sell below 57. You still have some limit order bears who sold above 54, sold above 55, sold above any bull bar. And chances are those, and if I said bulls and then bears that sold above any bar, and those bears are probably looking to buy back their shorts on a pullback. Bulls also want to buy a pullback. You do have some of the bulls who bought during 57, and unfortunately, there's some unfortunate bull who bought the high of 57. They are going to be disappointed by the pullback with the way 57 closed. They buy up here, they bought more during a pullback. So what are they going to do on a bounce? They'll probably look to exit their position. Some traders, and that's what they're deciding. Are they going to get out break even on the entire position and get lead to a small second leg down, or are they going to hold, betting that we'll test closer to the high of 57? Even if we pull back, I think we will test closer to the high of 57. Tight bull channel, a trading range is more likely than a strong reversal down. But this does look like a bull leg in what will become a trading range. Inside bar 58, but a bull bar. What do you notice about 47 to 57 or 58? You've had a few bars. You've had no bear bars closing on their lows or in the bottom third of the bar, except for bar 50 or 49. And that is a problem for that's a problem for the bulls. That's a problem for the bulls. That's a problem for the bears. Trading range more likely than the start of a bear trend. Even if we get down to the moving average, I suspect we're going to go sideways. High one buy. Reasonable to expect sellers above 58, but high ones, they often find sellers above because they lead to pullbacks and then trend resumption. So while there are sellers above 58, probably buyers below 58 and the moving average. This is what I was talking about. High one buy. It's common for the market to pull back and then try and get trend resumption. And what a lot of traders understand that high ones lead to pullbacks, but what gets traders in trouble is they try and sell the high one and they fail to realize that it's really a fade in the bottom of the bar. In other words, you're expecting a pullback in trend resumption. So if you sell here, and this day is a little different because it is an overall trading range day, but in general, you sell here, you get a pullback, and if you stay short, you can get caught on the trend resumption. Consecutive bull bars, but probably going to go more sideways here. Bulls trying to get the upside breakout. They might get it. I think overall, we're in a trading range. Overlapping bars, 57, 58, 59. Reduces the probability we're going to go a lot higher. But my general rule of thumb is whenever the channel is tight and I see open gaps and lots of bars above the moving average, I become very disinterested in selling. I'd rather look to buy below things, betting on sideways to up trading. Bulls managed to get an upside breakout. That was my concern. And I was long in here and scalped out on the retest of 57. I missed that, but 60 is a big bar, and it's probably more exhaustion than the start of a strong sell-off. Therefore, I'm really not all that interested in selling. I'm not interested in buying 60. I think we're going to get a second leg down after 61. So probably sellers above 62 and at least a little bit lower. But tight bull channel, probably going to go sideways. Probably disappointed bulls who bought the close of 60 and bought more lower. They'll use the bounce on 63 to exit their trade. Some exiting at break even, others exiting a little bit better and break even. That makes me think we'll probably get a small second leg down. What are the chances we get a strong reversal? I think it's relatively low. Tight bull channels typically evolve into trading ranges and not opposite trends. So the reality is traders buying here and buying more lower, especially a trader that can buy more moving average, they're probably going to make money. And that reduces the probability of bears selling too low, making money. Bulls, they want to trap the bears selling above 62. But after a bar like 61, consecutive buy climaxes here, bull break out of the bull channel, deep pullback, probably a small second leg down, likely. Bulls broke above the top of this trading range, and traders sold it. And we're getting far from the moving average. That is one of the reasons. There's a few things. One, we have a tight bull channel with a lot of overlapping bars and bears starting to make money above bars, and we're getting far from the moving average. Both of those reasons make me think that there's probably sellers somewhere up here and we're going to pull back. But a little bit tricky. If you sell below a bar like 61 and put a stop above 61, I don't know if you're going to make 1 times your risk. So the trader's selling here, putting a target at the open of the day. I don't know if they're going to make. I'm not that confident about that trade. I think the bears will get a second leg, but I think that's more due to bulls who bought scaling in lower disappointed, using the bounce to exit. And the bears know that, so they're taking the other side of that trade. Bears are selling in here, expecting a second leg down. By the way, make a comment in Discord or the GoToWebinar if you cannot see my mouse when I'm talking. Make a comment in Discord or the GoToWebinar if you cannot see my mouse when I'm talking. Otherwise, I'll be more specific in reference. Okay, great. You can see it. Otherwise, I'll reference bar numbers. Well, it went further than I thought it would. I was short. I sold above 62, scaled in, and at a target at the bottom of 62. betting that we would at least test near the low of 62, if not fall below it. But this is the issue. Lots of trading range price action, and that is not ideal for traders. 64 is a little bit of a surprise, so we may get a small second leg down, but it is 2 legs down in the trading range, and that increases the risk that we rally. But because of the pullback of how far down it went, and 64 being a surprise, there might be more sellers than buyers above 65. But as far as selling it, a little bit tricky. If you're selling it, you're expecting a small second leg down. So what caused the rally to 60? Was it, and then the deep pullback to 64? Was it news driven? Who knows? You know, I'm sure you could argue. I'm sure we can find something to say it was news driven. But at the end of the day, we're in a trading range, and we were in a tight bull channel. 60 was a buy vacuum, and the bulls that were still long, they looked at 60 as a great opportunity to maximize the profits, and they took it. And it was a breakout above the trading range highs where this red line is. So if we just zoom out, there's the top of this trading range here. We broke above it, deep pullback. This is why when I said small pullback rally, if I use the word small pullback trend, the reason why I changed and said small pullback rally is, I think of a small pullback trend as anything that's trending behavior with open gaps. But a true small pullback trend day and a small pullback trend are very different. This is a small pullback rally because it's within an overall trading range. And when it gets too climactic, the pullback can be very deep. However, because the channel is tight, the expectation is buyers around near 50%. We didn't quite get there, but we came close. I think probably sellers above and at least a small second leg, but I'm not willing to sell above the bar. I think it's too close to 50-50. Plus, we're in the bottom. The odds are we're going to go sideways. And the downside, I think we're closer to the bottom than the top. So I'm going to step aside and wait. I mentioned that 60, there were probably, well, actually, let me back up. I was talking about 65. 66, bull bar, we pulled back on 67 and found buyers. Bears were disappointed down here, scaled on higher, trying to get out. We may rally all the way back to the 60 close. So as far as buying or selling, right in the middle of probably a trading range forming, probably sellers above, buyers below, scaling in lower. Okay, someone asked a question. They said, Brad, I thought you said you didn't want to sell below 63. I said sell above 63 or during the bar as the reward would not be 1-to-1. No, I was talking about 64. If I said 63, I meant 64. What I was saying is here, I thought there were sellers above scaling and higher. And I said it was a little bit tricky because what I was trying to say was I mentioned it was a little bit tricky because the market could easily test up here. So I was willing to sell, scale in, and had a stop above 60. In other words, if we broke out above 60, I'd get stopped out. Here, this went further down than I thought. I had a target near the 62 low. I thought during this bar, I thought it would get a second leg down, but I thought the risk reward was bad. So selling here after on 65, I didn't think was all that ideal. I'd rather look to sell higher. That's what I believe I was talking about with bad risk reward. I thought it was sensible to sell above 62 or 63. My concern with selling 61 was bad risk reward. Selling below 61, stop above 61. I did not think the second leg would be as big as it was on 64. But that's why I mentioned that I thought you could sell below 61. I didn't think it was great because I thought there would be traders selling around the midpoint of 61 rather than below 61. And that's why I sold above 62. It's a weak bull bar. So the odds were there were sellers above. Here, I'm waiting. It's also getting later in the session, and so I'm a little bit resistant to wanting to sell, wanting to take that many trades in here. If I do anything, I'd probably be selling, scaling in higher. But right now, I'm just waiting. You can see more traders buying below 68 than selling. What about 69? There's probably more traders selling above 69 than buying. So I think we'll probably get a small second leg down after 69. So probably sellers above 69, scaling in higher. Bulls, they want an upside breakout after 69 and a test up to the 60 close. They might get it, but I think we're going to be more sideways. 69 is a doji, increases the chances that there's sellers above the bar. Bulls trying to get a breakout above 69 on 70, but in the upper portion of a likely trading range. Disappointed bulls who bought the close of 60, they will probably use the balance to reduce their position and buy back some of their longs. And you can see that's why we're pulling back on the close. That's why we're pulling back on 70. So to me, we're in the sell zone. Traders are probably looking to sell up here. So do you buy the close at 70? Probably not. Better to wait and see what the breakout above 60 looks like. Chances are probably sellers in this general area rather than buyers. The sellers may not come in until the 60 close. Bulls, you can see, let's look at the 15-minute chart. Bulls, strong enough breakout, they want a second leg up, and they're hopeful that this deep pullback is already a two-legged pullback that'll lead to an upside breakout. And it might. If we get a strong bull close and a breakout above the high of this bar, that would increase the probability. I think we're going to go more sideways in here, but I do think this is strong enough that we will go above the close of 60. And that is obviously what the bears want right here. Excuse me, that's what the bulls want. The bulls want a breakout above 69 and 68 with 70 and 71 to have follow through buying to increase the chances that we break out above the 60 high. It'd been better for the bulls if this wasn't the second leg up. First leg, 68, pullback 69, second leg up 70, 71. But the bulls are trying to get a strong close above 60. They have not done enough yet. Looks like bulls may try and break out above the 60 high. So I was talking about on the 15-minute chart. Consecutive bull bars, good for the bulls. We may try and get a small second leg up. Bears obviously want the opposite. Second leg up. Bears obviously want the opposite. I think it's going to be tough for the bears to get a decent sell below 72 with the bull closes 70, 71. Bulls, they want the upside breakout and a second leg up after the rally up to 60. The bears that were selling above 68 or 69, anywhere in here, got trapped 70, 71. And you could see that pullback, a lot of those bears started reversing their position or buying back their shorts at a minimum. and that could lead to an upside breakout here. Because the retest got strong in the final few minutes because of the retest up to 60 got strong as it got closer, you had more and more traders beginning to buy. So this looks good for the bulls so far. Increase the chances that we're going to go higher. But let's see how 72 closes. I ended up selling above 69, and I reversed my position. Selling above 69 was a little bit of a mistake. The odds were we were going to retest 60. So that really was not a good trade. So why did I reverse the position? Because I was a trapped bear, and the odds were we were going to go higher. And if I'm on the wrong side of the market, at a minimum, I want to at least go flat. And the better thing, I want to get into the right direction. But that can be a really tricky thing to do. You have to really understand the logic as to why you took the trade, why is it failing, and what the expectation is. Bears, you can see, selling. But after 71, 72, 73, after 3 consecutive bull bars, probably going to get at least a small second leg up. You can see traders buying the low of 72. We'll probably get at least a small second leg up and retest the 72 close. 73 is obviously disappointing for the bulls. It's a reminder that there's sellers above 60. But we may try and get a small second leg up and retest the 72 close. Important bar though. Traders are paying attention to see how 73 closes. Bears getting a reversal down after the breakout above 60, but a trading range is more likely than a strong sell-off. So I suspect we're going to go sideways here more than a lot lower. Late in the day, bar 75. Most traders should just be flat at this point. Okay, thanks everybody for being patient with me. So let's just start the review. It's interesting. I thought the rally up here to bar 72 was strong enough that the odds were we would get a second leg up. And obviously we're just now getting the second leg, or we got it during 78. Pretty common. Daily chart. Lots of overlapping bars increases the probability that we're going to start to go sideways fairly soon. I think we're going to get down to the 5,500 round number and the moving average. It could take a few weeks, but chances are we will get there. We have a second entry buy today, but fairly small doji bar, and that reduces the probability of traders buying above it. Weekly chart, you can see we have 3 consecutive bull bars, and last week is a small bull body. 3 consecutive bull bars increase the chances of buyers below, but I think this week is going to be a disappointing week. So I think, if I had to guess, I suspect that we'll probably get a bear bar, at least a close below the open for this week. 5-minute chart, lots of trading range price action and kind of an expanding triangle for most of the day. First bar of the day, we formed a bear bar, and it was a good bar for the bears, but when you get a gap up on the open and bar 1 is a bear bar, it increases the probability that there's buyers below. Because the gap was small, odds were we would close the gap. And then bar 2, we have consecutive bear bars, probably sellers above 2 for at least a small second leg down. 3, you can see we tested near the open, but there were sellers above 2. And then 4 was an inside bar. Tight trading range on the open, breakout mode. Whenever you get a tight trading range on the open, that's a warning that the market may have a lot of sideways trading for the rest of the day. Outside down on 5, good for the bears. We may get a small second leg after 1 and 2, but trading range open, better to wait for a clear breakout. 6 consecutive bear bars, 5 and 6, good for the bears, probably going at least a little bit lower. And then you can see what happened with 7. 7, it was a two-legged, we had a reversal up after 2 legs down. And that is the danger of trading breakouts on the open. Whenever you get 2 legs down, it's very common for the market to get a reversal. Now, if you look at 7, 7 was a retest of yesterday's 80, bar 80, 81 price level. Strong enough bull bar that it's probably strong enough to get a second leg. And this might be the second leg up after the gap. Whenever you get a gap up, it's common for the market to try and close the gap and get a second leg. For the bulls, 7, strong enough for a second leg. But it's not a trend. It's a trading range bar. And even though it's a trend bar, let me say it differently. It's a trend bar within a trading range. Therefore, greater risk that we go sideways and that the bulls are disappointed. 8, it's a bear bar, probably buyers below and at least second leg up. 9, bull bar, good for the bulls, but top of a trading range. I suspect we're going to go mostly sideways. Can you sell this? Well, 7 was strong enough for a second leg, and 9, it is a second leg up, but we may get a larger overall second leg, so I'm a little bit hesitant to sell right here. Plus, we had a strong reversal of 7, and we may try and get a bigger second leg up and test yesterday's 66 price level. 8, bear bar, good for the bears, but probably buyers below. Micro channel from the 6 low to the 9 high. And then 10, we formed an inside bar, high 1 buy, but probably sellers above. 11, you can see we triggered, I said 10, I meant 11. 11, the high 1 buy, probably sellers above. And you can see 12. 12, we ended up actually, let me adjust the mic 2 seconds. There we go. Hopefully everyone can hear me okay. 12, you can see what happened. We triggered the sell. We triggered the buy above the high 1, pulled back around the midpoint, and then went higher. And that's common for high 1s. You often get a pullback and then trend resumption. But then you can see 13, we got trend resumption, but it's a trading range overall. Now the bulls will see a wedge, 1, 9. The bears will see a wedge, 1, 9, 13. Weak looking signal bar, so probably buyers below. And then a doji on 14. Whenever you get a lot of doji and overlapping bars, you know you're in a trading range. We've been sideways for the first hour, and that greatly increases the probability that we're going to have a lot of trading range price action. There's one pattern we can realize on the open right now. Bar 2 and 6, bar 1, 9, and then 13. It's an expanding triangle. It may not look like this at the end of the day, but whenever I see the range expanding, I'm always thinking trading range price action, sharp reversals, and disappointment. 15, a bear bar. So if you're a bull and you bought the close of 7 and you've gone sideways 8, 9, 10, 11, 12, 13, 14, and 15, you've been sideways for 8 bars. And that greatly increases the chances of a deep pullback. So you'll have, I think, a lot of swing bulls, if they bought 7, they'd be quick to get out after a few bars of sideways trading. 16, breakout below 15, but not a great entry bar for the bears, but a bad bull bar on 16, so probably sellers above. And then 17, bear bar closing below 16. Good for the bears, probably going to go at least a little bit lower, but look where you are. And a little bit lower in the sense that it's 3 consecutive bear bars, but look what you are. You're right at the 8 low. And it's possible that 17 is just a sell vacuum test of the 7 high. So you're really more in the buy zone than a sell zone, so really not ideal to be selling down here. 18 tested the 7 high and pulled back. With it being a micro channel since 13 to 18, probably sellers above the 18 high. However, there's probably buyers near the 18 low, so it's really not all that easy of an area to be doing anything. You have limit order bull, bear selling above, scaling in, looking for a small second leg, and you have bulls buying near the 18 low. 19 consecutive bull bars, but overlapping, probably sellers above. And that's what happened with 20. 20, now we have a 3-bar micro channel, 18, 19, 20, and a bad stop entry sell below 20, so probably buyers below 20. And you can see we couldn't even trigger the buy on 20. Whenever I'm trading with limit orders in a tight trading range, what I'll often do is buy a tick or two above or below bars. So in other words, if I'm looking to buy the low of 20, and I think the odds are you're in the bottom of the range, I'll sometimes set a limit order 1 tick above the low of the bar, just in case it touches the low and doesn't fill me. 21, good for the bulls, probably going to go higher. So if you buy it, you're getting in at an earlier price. The risk you face is bad follow through and reversal on 22. 22, follow through, but what do you notice? 1, 2, 3. Leg 1, pull back, leg 2. So it's possible wedge and second leg trap. Leg 1, pull back, leg 2. You know it's called a spike pullback channel. So we may pull back. I do believe that 21 and 22 are strong enough for a second leg. 23, fair bar, probably buyers below. 24, another bull bear bar, but not strong, so probably buyers below and at least a small second leg. 25, bull bar, good for the bulls. There might be sellers above the bar, and I suspect there probably are. Some bulls disappointed. Thought to close, pop more lower, getting out break even. And that'll probably lead to a small second leg down. But I do think we're going to go above the 22 high or get closer to it. Strong enough breakout, 21, 22, probably a second leg up. 23, bear bar, that's because of 25 bear bar. That's what I mentioned. Let me back up. 25 is a bull bar. It's bad high 1, probably sellers above, and we're retesting 22, and that's why 26 is a bear bar. But probably buyers below 26, buyers at the 24 low. 27, a bull bar, second entry buy. You can call it a breakout of this tight trading range or triangle around bar 18. Not a great buy, but the bulls will hope for a second leg. And then you can see we tested near the high of 26 and we reversed down. So tight trading range, really not ideal. And then 29, breaking out, trying to get above the 22 high. I suspect we will. We'll at least go a tick above it. 30, bear bar. Not great for the bulls, but micro channel since 27, probably buyers below 30. 31, breakout below 30, but again, middle of the tight trading range after a breakout 21, 22, and a lot of bars above the moving average. Probably going to get a second leg. Inside bar, 32, but probably buyers below. 33, bear bar. Now we have 4 consecutive bear bars breaking out below the moving average. The bears want to double top, 30 and 22, and they want to break below the neckline 24 and a measured move down. And they might get it. I think the bears probably need 1 more bar closing on its low, and then 34 broke below 33 low. Even though it closed above the midpoint, it's a strong enough sell-off, 30 to 34. We'll probably get a second leg down, so probably sellers above. And then we have another bear bar, 35, good for the bears, probably sellers above. Tails below bars, 34, 35, and overlapping bars such as 31 in the sell-off, and that increases the probability that the sell-off will be disappointing. The range is fairly small, so we'll probably get down to the 6 low. 37, doji, probably buyers somewhere below, but we have magnets below. The bar 6 low. It's a micro channel, so the first look probably will fail. And then we had a surprise, 37. What about selling the close at 37? You can, but you probably need a wide stop, and better if you can scale in. Too much risk that there's sellers, that there's buyers at the 6 low, and the market pulls back, possibly to the 36 low. Bull bar, 38, good for the bulls. I think it's reasonable for bears to get out above the bar and look to sell again lower. But it's a micro channel since 30, so really not ideal for the bulls, but probably bulls scaling in lower. 39, outside down, good for the bears. Second leg down after 37, but probably a leg down in the trading range. And if you're selling down there, it's a little bit dangerous. 40, breakout below 39, but probably buyers in that general area. And then bad signal bar, 40. Bad signal bar to buy, 40. So some traders selling above it. You have some bulls who bought above 38 here, disappointed, scaling in lower. and they used the bounce on 41 to get out break even. 41, bear bar closing on its low, breakout pullback sell, but I suspect buyers below. And then 42, we tested the 40 low and reversed up. For the bulls, they want a second entry buy in a rally. You can take the buy, tight bear channel. It lowers the probability of an immediate reversal, but if we start to go sideways and collect more bull bars, that'll increase the probability that we're going to go higher. Bear bar 43, bulls failed to trigger the buy, but I suspect buyers below 42 and yesterday's low at the blue line. And then we got a bull bar 44 closing on its high. At that point, a little bit of a wedge. You can either call it 39, you can call it 40, 43, and 44, or several ways, 39, then 40, then 43. But strong enough bar, 43, that I think we're going to go back. I thought we were already going to get to the 38 high at that point, but I think it's reasonable for always in bears to exit above any bar, exit above 42, exit above 44 for sure, and we'll probably get up to the 38 high at a minimum. Decent follow through 45. Consecutive bull bar is probably going to get a second leg up. 46, a bear bar, probably buyers below, and then 47, high one, 46 is the high one buy. It's an inside bar, breakout pullback buy at the moving average. Probably there might be sellers above in the sense that the market may trigger the buy above 46 and immediately pull back to the midpoint of 46, but I suspect there's buyers around the midpoint of 46 and the low of the 46 for a second leg up. So selling above 46 is not ideal. Bull bar 47, probably buyers below. Surprise breakout 48, breaking out above the moving average. Because of 44 and 45, I thought the odds were we would get a second leg. Plus we have the open of the day not far above, and therefore increases the probability we're going to go higher. 49, bear bar, probably buyers below for a second leg. And then 50, you can see we retested the 48 close. Bulls bought the close of 48, disappointed 49, getting out break even 50. And then 51, bull bar, breaking out above 50. We're so close to the open of the day, probably going to get there. Possible wedge, 45, 49, and 51 if 52 or 53 reverses down. But open gap, the green box, 45 high, 49 low. I think that increases the probability. Whenever you get open gaps in a wedge, it increases the probability that it's a minor reversal, and we're probably going to go higher. 52 consecutive bull bars, good for the bulls. Probably going to go at least a little bit higher. And then 53, a doji, limits the upside, probably going to start to go sideways soon. But as far as what would I do here with two open gaps, potential open gaps, 50 high and the 53 low, in this gap down here, the channel's too tight, and I'd only be interested in looking to buy. 54 inside bar, high one, breakout pullback buy, probably sellers above and a pullback, but inside bars typically trigger. Inside bars are always pullback bars, so they're high ones and bull trends, low ones and bear trends, and it's very common for them to trigger and then pull back. Therefore, if we do trigger the buy or we pull back somewhere down here, I suspect buyers below. And that's what happened with 55. 56, breakout. But again, open gaps, increased risk of an upside breakout. 57, good for the bulls, probably going at least a little bit higher. 58, an inside bar. There might be sellers above, but we're getting more and more open gaps. There's an open gap now here, 57 low, 55 high. 58, inside bar, breakout pullback buy, another high one. This is a very common example of high ones and tight channels, where the market triggers the high one or tests on the, let me go back, when this bar closes, it's a high one, and the odds are it'll pull back and then get trend resumption. And you can see that's exactly what it did on this bar. It tested the low of the bar. It tested 59, tested the low of 58, and then tried to get trend resumption on the close of 59. And then 60, surprise bull bar. What about buying it? Consecutive buy climaxes. If you do buy it, you have to use the wide stop and probably scale in after a couple of legs sideways to down. For the bulls, a lot of bulls will use 60 as a profit maximization bar or a gift windfall profit, and they'll look to see what the bears can do. 61, bear bar, I think always in bulls, get out, and then bears will sell, or they'll look to sell a pullback. 62, high one buy, probably sellers above, and sellers at the close of 60. 63, a bull bar, but probably sellers above. Not a good entry bar for the high one above 62. Second leg down 64, good for the bears, but a tail at the moving average near the bottom of the channel, the 53 low, probably buyers in that general area. But because the sell-off down to 63 was fairly strong, that I suspect we'll have to go sideways for a couple of bars. Doji, 65, sellers above, buyers below, and then 66. It triggered the sell below 65, but because it's at the moving average, you can see it went outside up and there were buyers below. What about buying above 66? Because of the sell-off and 64 being a little bit of a surprise, I don't think 66 will go straight up. I think it'll go probably more sideways. And that's why 67's a doji. What about selling above 67? Some traders will. But this was fairly bullish, and that increases the risk that we have to test up to this price level. Doji, 68, probably buyers below, and then 69, we triggered the sell below 68, and we formed a bull bar right at the moving average, and bears will see it as a bear flag, and they want a second leg down to 64, but we may instead get the upside breakout, and I made a mistake here. I ended up selling the 69 high and then reversing the long. But the sell was really not ideal. 70, good bar for the bulls. Trapping bears may go a little bit higher, probably going to test up to the 60 close. And then we have consecutive bull bars, 70, 71, good for the bulls, probably going to go higher. And then we have 72. 72, a little bit climactic, kind of a parabolic wedge. Many ways to draw it, but one leg, two, and then three. 72 is strong enough, though, that the odds are whatever we'll probably have to retest it. So even if we pull back all the way down here, we'll probably get back to the high close, 72. 73, bear bar, a little bit of a surprise, may get a small second leg down. And you can see we had a fairly deep pullback. And then 75, 8 was what I was talking about. Bulls who bought up here and scaled in lower were able to make money. For stop entries, let me talk about always in. Always in bears, they can sell below 1, but if they do, or below 5, not ideal, but if they do, they probably get out as either above 7 or 7 goes a couple of points above 6. Bulls, they can buy 7, but if they do, they get out below 15. And then pretty tough. You can buy above 21, but if you do, probably get out below a couple of points below 30 or below 31, 32, 33. And then bears, they'll start selling. And then where do they get out? I think it's okay to get out above 38, but there's an argument that 37 is a surprise, and therefore 38 is a pullback, and we'll get a second leg down on 39, 40. And then after 40, I would get out probably anywhere at that point if I'm a bull, too much risk of a reversal up. Always in bulls can buy above 44 or above 42, and the bears obviously get out. And then where do those bulls get out? I think they probably get out below 61, but then in theory they have to buy again above a bull bar such as 66, and then they probably get out below 73. Bears, they definitely get out above 66. Limit orders, lots of limit orders today. Buyers below 4, buyers below 2, scaling in lower. I thought sellers above 9 or the close of 9, 2 legs up. Sellers above here, probably buyers below the 8 low over on 17 or 18. I thought buyers below 23. I thought sellers on the close of 25. Sellers above any of these bars. And then sellers above, but we didn't trigger. And then I'm not going to sell above a bar like 38. At that point, I'd rather look to buy lower. I thought buyers below 54, but a little bit late in the rally in a micro channel. Very common to get micro channels lasting 10 bars, 8 to 10 bars in trading ranges that don't allow you to get filled if you're selling above a bar. And then same thing for the bulls. Common to get a micro channel lasting a lot of bars that doesn't fill you. And that's a warning that something's wrong with the rally. And then I thought sellers above 62 and 63. Buyers below 68 for a second leg. I thought, and then that's pretty much it. I thought buyers down here, but very late in the day, so difficult trade. Buy the close, sell the close. I thought probably sell the close, 34, 35. And then probably buy the close, 45. Buy the close 51, but near the open of the day. And you can buy anywhere in here if you can use wide stop scale in. And then down here, really tough. 2 legs down, better to look to buy and scale in lower or wait for bull bars and buy below. Let me take a look at questions. All right, question around 12:30. Did I think that we were going to make it to the bar 30 close? So around here, did I think we were going to 12:30? I don't know. I thought it was reasonable to test the 30 close. I thought at this point we were probably going to get to the open of the day. I thought that was likely. And then when we started to form a tight channel, I thought the odds were we'd probably go sideways. And the one thing I didn't think was going to happen is we were going to close on the high today. And I thought we'd at least would have a small tail. And obviously we have a disappointing tail today. Can you go over why it is common in microchannels to not get filled? Is that for limit orders or stop orders? Yeah, that's for limit orders. So what I mean by that is it creates basically overlap in consecutive buy climaxes. Consecutive bull bars, when you try and buy below a bar, you just don't get filled. And that's a sign of parabolic behavior. Bull bars, you don't get filled here, don't get filled here, don't get filled. Think about it from this standpoint. When you have a lot of bars, let's just pull up 2 different examples. Here's a microchannel from 43 all the way up to 52, so 9 bars. It's a 9-bar bull microchannel. Actually, I say that. This is not, it didn't. Let's use this. Because here, this actually triggered below. The point I'm making, though, is this. Here you have a lot of overlap, and it's not allowing you to get filled. So it's basically, it's selling off, pulling back, selling off, pulling back, selling off, pulling back on a different, lower time frame. And that's what this looks like over here. This is a 1-minute chart of, look at this sell-off, big bar, another big bar, another big bar. Look at this. It's a micro channel, but the pullbacks are not that deep. And so what happens is when you get a lot of overlapping bars, traders expect a pullback, and they don't ever get filled on the pullback, and it forces the traders to either chase the market down, making it more parabolic. Plus, when you add that into all the trading range price action we've had today, there's an increased risk that it's more due to a sell vacuum test of support. So where do we go tomorrow? I think we're probably going to be mostly sideways. Disappointing bull bar for the high 2 buy, probably sellers above the bar. But we could go sideways for a lot of bars, and we could still get to 5,600. So the bears are not clearly in control. And because of that, the odds slightly favor the bulls. Okay, thanks everybody for listening, and I will talk to everybody soon.